It's extremely difficult for the central banks to get a handle on just where it goes from here.
The data supports that things are weakening, and I think the Fed's going to pause.
Usually when you got a Fed funds hike cycle, of course, equities sell off.
Wednesday could be a landmine if they sound more hawkish than expected.
This is a Fed that doesn't like to surprise. Unless the CPI numbers are just absolutely wild, they're not hiking this week.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
CPI Tuesday, live from New York City this morning. Good morning for our audience worldwide. This is Bloomberg Surveillance on TV and radio alongside Tom Keene and Lisa Abramowicz. I'm Jonathan Ferro. Your equity market positive by a little more than 0.1% on the S&P. We are about 2 hours and 30 minutes away from some important economic data in America. Then it's onwards to the Federal Reserve and Chairman Powell, TK, tomorrow afternoon.
Markets getting out front. The markets lift yesterday. They lift today. It seems to be a celebration of a tilt to a better core statistic. And I would say maybe more than ever, it's not CPI Tuesday. It's core CPI Tuesday. Everybody focused on the basics of what's out there in the economy, and the tone is constructive.
China Stimulus Tuesday as well. Fantastic reporting from the team here at Bloomberg on the latest in China, considering a broad package of stimulus measures as the pressure builds on the Chinese government and Xi Jinping to support this economy. This, Lisa, according to people familiar with the matter overnight.
Here's my issue with this whole story, which is, are they trying to stimulate or are they trying to support from some sort of significant deceleration that's more protracted? I don't have a sense of that because we're still seeing that 5% target, which is somewhat conservative. For
surveillance out front. We try to do this, folks. Sometimes we get it wrong. Sometimes we get it right. Ian Shepherdson with us yesterday from Pantheon, and we talked about his colleague Duncan Wrigley's work on China. It's been brilliant. And boy, did they nail what you just said, Lisa. They say this is not a major stimulus. This is a limited, narrow effort to salvage subpar growth.
So let's go through the proposals, the reporting, and then I'll get you some opinion. So at least a dozen measures being proposed, considered over in China at the moment, designed to support areas such as real estate and domestic demand. Those measures include the potential for interest rate reductions. Here's an opinion for you. Marko Kolanovic over at JP Morgan publishing yesterday afternoon, any China stimulus is unlikely to be meaningful. PMIs could converge, but with services coming down towards manufacturing in the second half. We heard from Mislav Matejka at JP Morgan yesterday morning as well, saying something very similar. They're on the same team. Ultimately, they think any hope that China is going to outperform, pick up in growth.
Do a 2008.
They're pushing back pretty hard.
Yeah, I'm seeing that throughout a lot. What I would suggest, a la what Ian said yesterday, is this is where you get rates down there on subpar growth, and then you begin to ask, will we disinflate in China and bring that disinflation over to ebb any inflation worries in the West?
Got to talk politics this morning as well, TK. We'll talk about CPI, what it means for the Fed. We'll talk about the prospect of China's stimulus. We've got to talk about the president, TK, heading to court.
Extraordinary. I really don't know what to make of it because this is so original. To our international audience, you're going to have lots of people, bow tie or not, trying to pontificate about where this places in American history. I would suggest no one does. It's an original moment for the nation.
Katie Lyons on the ground in Miami. We're going to catch up with her a little bit later this morning, together with the rest of the team in D.C., led by Bloomberg's Anne-Marie. Look out for those conversations through the morning. 2 hours, 30 minutes away from that economic data. These are the scores right now, the way the stage is set going into that information a little bit later on this morning. Equity futures positive by 0.1%. Yields come in just a touch, but barely changed this morning at 373.18 in the FX market. Euro just a touch stronger. I've got to say on the session, Lisa, here, 108.05. And just to finish with crude, trying to get up off the mat. Yesterday and the last couple of weeks hasn't been great for crude, has it? Pullback continues, trying to bounce by 1%. On a session, $68 at the moment.
You definitely categorized that correctly, trying to get off the mat after a pretty significant underperformance, even after with those supply cuts. We're looking today, 8:30 a.m. Eastern. That is the U.S. CPI print for the month of May. As Tom was mentioning, core CPI really is the key metric. It's supposed to come in to about 5.2% year over year from 5.5%. This driven by rents. We are seeing rents decline in certain areas in the nation overall, are decelerating at the fastest pace going back years. How much does this support this view feeling that a skip, a pause could happen and then be protracted. At 10 a.m., U.S. Treasury Secretary Janet Yellen is testifying in front of the House Financial Services Committee. She's going to be talking about why the U.S. should support the IMF and World Bank to counter China's Belt and Road Initiative and all that entails. And at 3 p.m., Trump is expected in Miami federal court at 3 p.m. Very curious to see just the public response to it, the security, what kind of drama there is out of the courtroom, because in the courtroom, it's just the initial salvo of a long, protracted process that we'll find out more about.
What a moment for this country. Plenty of coverage of that just around the corner. Let's start the conversation around the market. Jonathan Stubbs, equity strategist over at Berenberg, joins us right now. John, we're having this broader conversation over the last couple of weeks as to whether this equity market rally, year-to-date dominated by mega-cap tech, can broaden out. Do you still like the small caps? And if so, why do you like the small caps, John?
If you follow signals and if you follow valuation, US small caps, so the S&P 600, trades under 12 times on a median stock basis, S&P 500 on 17, 18 times on the same basis. And that gap we've only seen twice before in the last 30 years. Once was 2000, many people remember that. Once was 2020, most recently. Both of those were excellent near or long-term, respectively, buying opportunities for small caps. So valuation and the signals we've seen over the last 25 years tell you to do one thing here, and that's to buy small caps. Again, that's pretty contrarian given to market moves over this year, although we've seen some reversal year to date. So if you do think valuation is important to drive or support returns over the medium term, we've got a valuation signal here, and that's telling you to buy US small caps, despite softening of economy ahead and despite the strong leadership we've seen from a very few stocks in the US year today.
Jonathan Stubbs, I love it's too early to do this, John. It's way too early in the morning to do the math of it, but you push aside 60-40 as a traditional 60% equity, 40% bonds. You've got a 40-20-40, which is 40% equity, 20% bonds, and 40% based on liquidity. Is that play done now? So what's next? If the VIX has come in with the drama we've seen, what's the new Stubbs allocation?
Yeah, I mean, when I started here at Berenberg in 2020, I wrote the 60-40 was not appropriate to sort of hedge the post-COVID world with inflation risk, etc. Members of Treasuries, 10-year Treasuries yielded 50, 60 bips, summer 2020, and went to a very sort of unconventional asset allocation framework, which had a very long tail exposure to real assets, alternative assets, which is in that sort of second 40 you mentioned, and also to a liquidity hedge, trying to find a combination of assets that provided investors some protection against world risks, against black swans. And in that bucket, I still have Bitcoin, which is controversial to many. I have cash, and also have gold. And I think that's still relevant because there are lots of uncertainties. You're talking earlier about sort of political history being made in the US this week. We've now got politics being very explicitly weaponized. I think that must bring into question the risk premium that investors globally attach to the US, to US assets, whether that's the dollar, interest rates, or asset classes. So, I think running asset allocation with eyes closed these days is not an option. I think eyes need to be wide open. And I think adding legitimate protection is the best way of approaching these markets for a variety of reasons.
What does it mean to have your eyes open if you have underperformed, if the assets that you've had faith in haven't really delivered, and the rest of the universe that perhaps have fundamental reasons for why they should sell off continues to outperform and even add to that? What do you do?
Yeah, I guess it depends what you're trying to do with capital. I mean, high-level asset allocators, capital allocators are trying to deliver a real return, protect capital in real terms, and you don't need to be the best performing asset class to deliver that. So, we're still recommending a 40% weight in equity, and in that equity sleeve, we're recommending strategies such as defensive growth or quality at a reasonable price, fiscal alignment, which is owning industries or companies that align with very sort of strong narratives from governments, which gets you into sort of cyber, into defense industries, into infrastructure. So we do bring that into it as well. But overall, we're trying to look at a balanced package that presents a good opportunity to deliver real returns.
John, excuse me. I walked in the door. SPX 4,400. That was what futures said. Give me your S&P 500 a year out.
Yeah, if you look at measures, if you're sort of top down first, which I am, you look at all these signals coming from margins, from the yield curve, and a year out we may be at sort of similar levels or slightly higher, but it does suggest that we're going sort of significantly lower between now and then. Alternatively, you have to scrap everything that we've learned over the last of 10, 20, 30, 40, 50 years and construct a very new forward-only looking narrative. And you have to say that we're living in a time of captured markets where fiscal underpins everything, supported by monetary, and we're going into a world where authorities effectively remove free markets from what we've been used to, and you can construct a very reasonable bull case for equities, I think, on that basis. But you have to assume that we're not living in an environment of free markets.
John Ferro, did we get an answer from him?
I think there was something about central planning being good for
4,500, or come on, I need 4,600 out of you, Jonathan.
We're selling rallies and buying dips. That's what we've been doing since the start of this year. We think we're sitting towards the top end of a very strong rally, which has been great for the market.
Yeah.
If you look at the technicals here, the technical setup is not to add aggressively at this point. Look at sentiment. Sentiment in October was telling you to buy markets aggressively. Sentiment now is not telling you to do that. So that's the warning sign out there for investors.
We were right to buy the post-SVB dip, that's for sure. That's paid off. Jonathan Stubbs of Berenberg. John, good to see you, sir, as always. TK asking about index price targets on the S&P for year-end. Yesterday evening, I was just summing it all up. Some of the moves we've seen over the last couple of weeks. RBC made a move. May 21, Bank of America new year-end price target 4,300 was 4K. Early June, Evercore 4,450 was 4,150. Goldman going into the weekend, now 4,500 was 4,000. 4,000 was where the center of gravity was, Tom. And as we get further and further away from it, I think the upgrades are starting to come through for the mid-year outlook.
For TV and radio, I can't do this. It's too technical, but it is the Bloomberg terminal. It's a thing called ADX DMI. And, John, it's a lot of fancy calculus. It's actually really, really magical technical studies on the Bloomberg. Here's the answer. This is not about people buying, John. It's asymmetric. This rally is about a dearth of sellers. There's a difference. It's not about, OMG, I got to own Apple. It's, I'm not selling Apple. There's a difference.
Well, I think there's certainly been a bit of we've missed out. I think we need to pile into these names, Bramo, over the last few weeks.
We're hearing that more and more. This has legs. It's AI. It's something that's more sustainable. Forget interest rates.
It's a bull market.
Exactly. Here we are.
It's a toxic brew of optimism.
A toxic brew of optimism. These bull markets, Tom, I remember a headline you wrote a long time ago. I brought that up recently. Most hated bull market ever. These bull markets over the last 10, 15 years, all these rallies are just despised.
It is criminal how the public has missed the greater bull market because of overthinking. Criminal. That goes back to Roger Ferguson.
Well, that goes back a long, long time.
Yeah, Roger Ferguson of TIAA-CREF and the Fed is very articulate.
Scarred by your trading days in the 30s. I know. Equity futures on the S&P, positive by 0.1%.
Cigars.
Inflation data. They were the days.
Scotch,
a few hours away.
Bottle of scotch in the drawer.
Keeping you up to date with news from around the world. With the first word, I'm Lisa Mateo. There are more signs that China is increasingly concerned about a slowing economy. Bloomberg's learned that Beijing is considering a broad package of stimulus measures. Meanwhile, China's central bank has unexpectedly lowered a key short-term interest rate. The latest U.S. inflation figures come out today, and Bloomberg Economics says the data are likely to give support the Federal Reserve officials wanting to put their tightening campaign on pause this week. It's estimated that core inflation rose 0.3% last month, a slowdown from April's increase. In Miami, police say as many as 50,000 people could turn up when former President Trump appears in federal court today. He's expected to plead not guilty to charges involving the mishandling of classified documents. Trump loyalists have promised to show force. France's President Emmanuel Macron says he hopes Ukraine's counteroffensive is successful and will lead to negotiations. Macron and the leaders of Germany and Poland met in Paris. They discussed coordinating military assistance to Ukraine and the upcoming NATO summit. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Lisa Mateo, and this is Bloomberg.
I always want to make sure that we have a fair process. And what's really concerning to the American public, that it really seems like one side of justice is being weaponized.
What about those pictures? Was that a good look for the former president to have boxes in a bathroom?
I don't know, is it a good picture to have boxes in a garage that opens up all the time? A bathroom door locks.
Oh. House Speaker Kevin McCarthy there.
The Bravo cam caught an exclamation there.
Bramo not too impressed with that exchange. Perhaps she can reveal why in just a moment. Your equity market on the S&P 500 shaping up as follows, going into CPI later on today. Equity futures up by 0.1%. Yields unchanged, 373.57 on a 10-year maturity. I want to go straight to Apple, closing at a record high in yesterday's session. Just a touch softer today. UBS making a move, moving to neutral, cutting the outlook for Apple. They say softer iPhone and services growth. Apple trades at 29 times our near-term EPS estimates, above next 12-month estimates, above the 1, 3, and 5-year average, Tom, of 25, 27, and 23, respectively.
They had their developers conference. And there's some quibbles there about this box or that box, but the answer is just life goes on for Apple. And as they approach $3 trillion market cap and the vector that we've seen, at least since the October lows, you have to say of Apple, they just continue to grind out what they do. Mr. Cook says to build the ecosystem, the number of people involved in this each and every day.
Quite a run, though, TK. All-time highs. What are we up now on the year? 30, 40%?
Yeah, my quick math a week ago rather, was 191 is 3 trillion, and we're at a 184-ish, 83-ish.
Up 41% year to date.
Yeah, and
it's quite a run.
It's quite a run, and it's lesser than the NVIDIAs.
Check out NVIDIA, I was about to say.
Yeah, well, there's
up
others.
100 plus,
Meta
too. Yeah, I'm with you.
And this is important. We got to get to the work on the former president, but this is important. Apple's under-owned by institutions. You know, it's an unloved stuff. People don't want to buy it to the size of its impact on the market.
Amazon up 50%, also under-owned. These names just got battered last year. Big tech had a really, really difficult time, and the bounce back has been severe.
Do you need new iPod thingies, whatever they call them, to go to camp?
No, mine are pretty decent. I don't go to camp either.
Debate at home.
Do you camp?
Well, you got to go to camp, summer camp. You got to have some new Apple stuff. I'm not camping.
Okay.
I'm writing a check. I mean, it's, you know.
You've got to mute your terminal there, Tom, too.
Oh, yeah.
Messages popping.
I didn't do that. Somebody else did it here.
Okay.
It's okay.
If you can mute that, that would be great.
There it is. It's very loud, actually.
Good.
Right now, in Miami, seriously reading in on this historic moment for the nation. We're going to get to Wendy Schiller of Brown University. But first, Kaylee Lines in Miami. Balance of Power, of course, with their complete coverage this afternoon. Kaylee Lines, what will you observe today of the judge at this arraignment?
Well, we won't actually see the judge or President Trump inside the courthouse, for that matter, Tom, because cameras aren't going to be allowed. And frankly, we may not even see the former president walking into the courthouse through the lobby. Instead, he's expected to enter through an underground tunnel. What we know, though, is that once he is inside, he will be arrested by authorities and then processed just like anyone else who is facing federal criminal charges. He could have his fingerprint and mugshot taken, and then he will go up to the 13th floor and appear before that judge. And we expect him to plead not guilty to these 37 counts of 7 different federal criminal charges. And of course, that is what makes this moment historic. No other former president has ever been charged of a federal crime, even though he has been previously indicted, as we saw in Manhattan.
Right.
Earlier this year. And of course, after all the proceedings here in Miami today, he's getting back on the plane, heading back up to Bedminster, New Jersey, in his golf club there. He will address supporters at 8:15 p.m. Eastern time and hold a fundraising event for his 2024 campaign. The campaign expects to raise $2 million at that event tonight.
Long day for Kaylee Lines, and we'll see where that goes tonight with the president speaking in New Jersey. Right now, and this has been just a joy for us over the recent weeks, Wendy Schiller joins us, director of Taubman Center, Brown University. Wendy, we're squeezed for time today. Let's just cut to the chase. It is truly an original moment. This is not in your classic textbook. How will you place a new chapter into your textbook?
Well, in some ways, I think that this is a development for the democracy. And if you're a Trump supporter, you say, oh, this is terrible and it's a political witch hunt. But if you think about it, why should presidents be shielded from behavior if it's criminal, whether it's federally criminal or breaking a state law, when they're president? I mean, they should be held accountable. This is an evolution of where we are. Latin America, we know, we don't want to be like them. But even Europe now, Nicola Sturgeon was held just the other day, former leader of Scotland, for things she might have done or her husband might have done for their party. Democracies have to have a rule of law. And if you let the most powerful operator in the democracy break the law because they're insulated from prosecution when they're president, they're probably going to do that. And that's not something I think we want in the 21st century. So I'm not as perturbed or disturbed by this. I don't think it's a political witch hunt. I am concerned that when Democrats get out of office, the same thing will happen. But there is a rule of law. And if you break the law, you need to be held accountable.
There's the prosecution and then there's the response publicly where people who are for the former president are still for him and do believe that this is some sort of undermining of the institutions. What's your takeaway from that when you teach your political history classes at Brown?
Well, I mean, political loyalty has turned into, very fierce support and sometimes violence in the entire history of the country. That is not new. We have to see what happens today. How many will come out and go to a rally in the, not that hot weather, we think maybe in Miami today. But is that the same as, committing violence or trying to upend the system entirely just to save this one person? It's a larger problem for the Republican Party going down the line. They really, in the end of the day, McCarthy's answer was quite weak. There's a bathroom lock. There's a lock on the bathroom door. That's, this is the Espionage Act. These are military secrets. Is this man capable of being entrusted with national security? That becomes a larger issue as this trial proceeds for the Republican Party and those other people running for office in 2024 in the Republican Party.
Putting aside Kevin McCarthy's response, you can come to whatever your conclusion that you'd like to come to that. There is an issue of at what point Republican nominees or potential nominees start to push back against what former President Trump is facing up against or starts to put a little bit more credence in the judicial system. Do you expect that to be the case, or do you think that there will continue to be support and import around backing the former president and really kind of sticking with that line?
Well, Lisa, that's the very important question that we have to ask ourselves over the next couple of months. The question is, in the polling, they've got to win the primary. I mean, this is the most devoted Republican voters, but a lot of independents in some states with open registration vote in the Republican primary. They maybe voted Republican before Trump. They've left Trump in majority numbers in the last couple of years, but will they vote in Republican primaries? And if independent voters do that, right? They vote in Republican primaries, they're not going to want this guy. And how do you balance that? And then, of course, in the general election, we know they're not going to vote for this guy. So this is the big question for those other people running. You don't want to alienate your core base of Trump supporters. On the other hand, other people vote in those Republican primaries, too. And they're just going to get sick of this, especially if there's a Georgia indictment or a January 6th indictment. Yeah. This guy just becomes too much of a liability. And then you risk losing turnout in 2024 among that base for Republicans.
Wendy, I have 30 seconds. What kind of legal representation does the former president have today?
I think they were scrambling as of yesterday, so I'm not even quite sure. But then you have to ask yourself that question, too, is at what point does he lose the capability of getting the very best minds in the country to try to defend him? And let's not forget the judge. This judge sort of got in trouble for the way that she handled this case earlier in its proceedings. What does she do now? And does she continue along that path, or does she sort of more conform with regular judicial standards in the federal judiciary?
Wendy Schiller of Brown University. Wendy, we'll be talking soon, no doubt. TK, that is the question, isn't it, this morning?
You nailed it. I feel remiss I didn't bring it up earlier. To me, it's the most important question, having nothing to do with politics. Any individual in court, particularly if they have means, should be entitled to the best legal representation. Clearly, that's not the case this morning for the former president of the United States.
It appears he's struggling to find it.
For whatever reason, it may be self-inflicted. It's not for me to judge. It's an outrage that we're having this conversation. You nailed it by bringing it up, John.
Equity's just about positive on the S&P 500. From New York City, this is Bloomberg. Three-day winning streak on the S&P 500 coming into today. Can we make it four in the equity market? S&P 500 futures look a little something like this. Futures positive by 0.1% on the S&P. On the Nasdaq, outperformance on the Nasdaq all year. Underperformance month to date on the year so far, though. Yesterday, adding some more weight to the rally. The Nasdaq 100 up year to date, Tom, 35%.
Just quick review here, what we talked about before, the fancy technical mumbo jumbo. There's just nobody selling. I mean, it's just all there is to it. And I saw it yesterday, NASDAQ up, pull back, hang out for an hour, up, pull back, and then a nice pop at the end.
It's a great description of the session, TK.
Oh, it's very technical, 44, and I walk in, the first thing I see on the Bloomberg terminal, SPX index, 4,400. I couldn't have framed that 4 weeks ago, let alone 4 months ago.
4,500, the new forecast at Goldman. Is it bullish enough? Sentiment's changed. They're the kind of questions that people are asking, and no doubt things can change just as quickly in the other direction. A lot's changed in the equity market. Not much has changed at all in the bond market. The 2-year, I was looking at the scores year to date yesterday evening on a Bloomberg terminal. The 2-year on the year is up by something like 15, 16 basis points. Tons of volatility in between, as high as 5.08%, really low post-SVB. We were talking about hard landing, credit crunch and all that stuff, all that bad stuff. And we get further and further away from that. And we start to think about a Fed that can pause and maybe even hike once more. In the FX market, are we about to get whipsawed by China's stimulus and a stronger euro again? We reclaim 108, 108.01 on a euro. German investor confidence, not dreadful. A little bit earlier, TK, you throw in our reporting that China might be considering stimulus, and all of a sudden, you've got a stronger euro again.
So China's stimulus, lower interest rates, which means weaker yuan, and you see that reaching the goal of many people, which is from 7.00 to 7.15. And Stephen Englander, I believe it was yesterday at Standard Charter, framing out 7.30 is an ever weaker yuan.
We've had the China reopening. We've had the energy scare and come out the other side in Europe. There were reasons to buy that story because it was deeply depressed coming into 4Q last year. And Tom, now you're looking for a new engine of growth in this market. Where does that come from? I think the fact of the matter is we are halfway through the year and we're talking about stimulus in China when we should have been talking about, and this was the consensus view at the start of 2023, we thought we'd be talking about China just booming on the back of a reopening. And here we are talking about rate cuts, measures to support the housing market, the broader economy, the government under pressure. That's a real turn, a real change relative to what we expected 6 months ago.
Quickly here, Lisa, where are you on this? I mean, where I am, as John says, we're halfway through the year. I feel like the year's been 14 months long. It's like June, and it feels like November.
It's just been continual whipsaw and a lack of uncertainty. And even within specific regions, they're bifurcated kinds of recoveries. And within the U.S., certain states are doing better, certain states aren't. So, Tom, I think to that point, it's hard to get a handle on the overhead, top-level view of the economic picture.
Let's solve that right now with Janet Henry, Global Chief Economist and head of the top-line view at HSBC. We're thrilled she could join us this morning. Janet, I want to blend together the central bank derby that is upon us here with the China news. And this is where the Hong Kong and Shanghai Banking Corporation has a real ability. And that is, if we see a troubled China, a disappointing China, will we import their challenges? Will we import their disinflation?
Not immediately. You're right, relative to, I suppose, the consensus view earlier in the year, when there was a huge amount of optimism regarding China and reopening, and some people got very excited about the idea of unsynchronized growth, that China would lift Europe and they would both rebound as the US went to the inevitable hard landing. And the truth of the matter is the US has already been more resilient. China has not had the explosion on reopening. Remember, this was the second reopening, and it's now clear that more stimulus will be required to continue the recovery. So I don't think, given that we're not getting the same trade channel, that world trade growth is already very weak. Even US and European import growth is not strong. There's not the same deflationary influence. And while we have seen commodity prices perhaps be a little bit weaker than many anticipated, and in fact, they're probably half their peak levels, remember, they're still a lot higher than they were back in 2019. So I don't think it's quite as clear-cut that suddenly China being weaker poses deflationary influences to the global economy.
You must have read my script, because that's where I want to go. Folks, I just looked up quickly here, the United States Department of Agriculture, the USDA, and their guesstimate for inflation of food this year in the United States, and it's banded roughly 5 to 8%. It's much worse, Janet, for many parts of Europe. Are you beginning to see, on this core CPI Tuesday, are you beginning to see among the central banks a lessening of food inflation?
You are, but so far it's interesting where you're seeing the biggest drop in headline inflation. It's actually been more in the emerging markets. So everyone's seen the energy inflation come down, and where you've seen bigger reductions in food price inflation, it's been more in emerging economies. And I think part of that is because in emerging economies, whether it's in Latin America or in Asia, they buy more fresh food. A lot of what we buy in the West is packaging. Let's not forget that, and labor costs. So I think we are going to see some easing of food price inflation, but remember, it's still running at close to 20%. And when we think about going forward, we're still going to have volatility on inflation. We have good harvest in Brazil, and then we hear about really bad harvests likely in Australia. So it's the volatility of inflation. And remember, for producers, they're not going to move with every monthly change in wholesale food prices.
Janet, we're about 2 hours out from that key CPI print in the U.S. We are looking at a lot of central banks, including the Australian Central Bank, including the Canadian Central Bank, and now potentially the Bank of England after that incredibly and surprisingly hot labor print that we got earlier this morning. What's to say the U.S. isn't facing the same inflation dynamic that the U.K. is, that Australia is, that Canada is?
Well, it is facing more resilient growth, but where some of the key differences are so far on the US versus the others, and in particular the UK, is clearly on the labour market. When you're getting wage prints around the 7% level in the UK, and remember, this is an economy that really hasn't grown for the last year, the labour market is still surprisingly strong, and the wage releases, workers are clawing back higher pay rises. And clearly what Chair Powell has been telling us in the last couple of months, there are certain elements of the US economy that so far are different. Doesn't mean they will continue to be different, but it is highly unusual that you see pay growth having slowed from just under 6% to just below 4.5%, still not consistent with 2% inflation, but to even move down without any rise in wage growth means that the inflationary pressures are somewhat different in the US than the UK. And obviously Australia's got a lagged wage market story and has got some more rigid wage setting procedures as well. So the US has got an inflation challenge. I don't think the fight is over. I still think they probably will raise rates again, although clearly not in June. They told us that, but I think that the Fed isn't done, and I still don't think it's going to cut rates quickly. It will be closer to the middle of 2024 before we see a rate cut from the Fed.
One of the reasons why this is one of the most confusing periods economically is because you mentioned that figure of where wage growth has come down. And I wonder, how much is that compositional? How much is that because some of the people who are getting wage gains are on the lower income sphere, that there's been a white collar recession? How much is this a compositional story more than anything else that makes it incredibly difficult to even look at some of those overarching numbers?
Well, very good point, because actually, if you look at the lowest paid sector in the US, it is leisure and hospitality. And for a period, without a doubt, it had the strongest wage growth. It was about the only sector that didn't see a real wage squeeze, because for a period, they were getting pay growth of over 15% or so. But in the US, wage growth has slowed in nearly every sector, but you're absolutely right. It's been in the information sector where you have seen a recession, that you've seen the most jobs lost. There is a compensational issue, but you've got divergences in other economies as well. The UK release today was quite interesting. The strongest growth in employment was actually in real estate, ICT and finance, not the jobs.
You went right where I want to go, Janet.
Lost in the US.
I love it. You went right where I want to go. I'm asking this for John from Coventry. Okay, it's real simple. What's the Brexit effect on inflation and growth in the United Kingdom? I don't see anybody really addressing that. What's the Brexit effect? Thumb up or thumb down from Janet Henry?
I think it's fair to say that the Brexit impact on the UK economy has been to contribute to lower growth and to higher inflation. Can't give you point estimates at this point. A lot will depend where we go from here. But so far, it's been on the supply side of the UK economy that we felt the impact of Brexit. And yeah, I think that's as much as we can say at this point.
Janet Henry of HSBC, very diplomatic. Janet doesn't want the hate mail, TK. That's what that's
about. She knows who's watching. She knows. I mean, he watches
Janet,
every
thank
morning.
you. Wonderful. Elisa's right to bring up the data. We've had double-digit CPI in the UK. It's pulled back, but it's still close to 9 at a headline level. And a wage growth story this morning out of the United Kingdom, really, really punchy stuff. We're talking about 7 handles, 6 handles. And Lisa, I'm looking at the projections for the Bank of England now. And we had this conversation here stateside about the prospect for 6 on Fed funds.
Yeah.
That's the conversation on Threadneedle Street and for the City of London this morning, the prospect of maybe getting out somewhere to 6.
And we're talking about a much more stagflationary kind of environment because other areas' growth is slowing, although still better than expected. How do you understand this? Is this structural change to a labor market just in the UK, or is it global? Because we're also seeing it in other European nations. We're also seeing it with an aging workforce. This is why it's such a tough moment to get a handle on.
2 things quickly here. We aggregate central banks, and boy, are they all different. Every nation's different. Every economy's different. But I would suggest, John, I defer to you on this. The polarity in the United Kingdom from a prosperous service sector dynamism of London and other geographies you know better than me versus a United Kingdom flat on their back is I would suggest, it's different, but as stark or starker than in the United States.
Well, you know me, TK, I'm probably the worst person to ask that question to because I have a long-only bias on the City of London. I'm so bullish on London and always will be. I agree,
and I'm an American.
I sit here, and I've sat here for a long time, and I hear people come over and say, oh, yeah, the UK, isn't it bad, isn't it bad? Then I land in London, and Tom, it's booming. I get to the city, and it's doing great. And I see everyone who lives there, and they're enjoying it. Reminds me of Switzerland. I remember in Switzerland, I talk about this a lot. You'd go over to Zurich, and you'd see all these blacked-out luxury vehicles, and everyone's living it large. And then the central bank, the SNB's like, oh, negative rates, negative 75 basis points. We've got to get inflation back to 2. We've got a problem. The currency's too strong.
The United Kingdom continues to surprise. That's
all the complaints I hear about the City of London, I talk to people who work there, they wouldn't swap it for the world. Yeah, things need to improve, but I think you can make that argument
Team
everywhere.
surveillance?
I think
Team surveillance, a move to London?
As I say, I'm not going to give you a balanced view on the city. Long-only bias.
Brahma, what do you think? The kids could acquire a British accent.
Crude trying to climb out from the route.
$68 a barrel, Bramo.
There we go.
Coming up in the next hour, Jack Lew, the former US Treasury Secretary, coming up in about 60 minutes from now. From New York, this is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. Former President Donald Trump will appear in a Miami court today to face criminal charges. Miami's police chief said they are prepared for crowds up to 50,000 people. Now, Trump is expected to enter a plea to a 37-count indictment accusing him of mishandling classified documents. Goldman Sachs has rethought its prime brokerage relationship with Odey Asset Management. The London-based firm removed its founder, Crispin Odey, after new sexual assault allegations. We spoke with the CEO of Goldman Sachs International.
Yeah, as a firm, and frankly our people, we hold ourselves to extremely high standards, and we expect the same of our client base, and that's how we work together in partnership. And so, when new information comes to light in any situation, we'd obviously review it quickly, and then take the appropriate action.
So what, you've severed ties, or are you still contemplating what happens next?
We're in the process of moving away from that business.
Crispin Odey has denied the allegations against him. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Lisa Mateo, and this is Bloomberg.
The data doesn't support a huge amount of strength in the economy. The data supports that things are weakening. And I think the Fed's going to pause because I think they need to see how fast things are weakening. Remember, if they're going to land this thing, they want to try it for a soft landing. They don't want to crash it. We do think yields are going to move lower from here, but we don't think they're going to return to kind of the 1% level, 2% level.
This is what I love about Wall Street. Drew Mattis there of MetLife Investment Management. I've known Drew a long time. Incredibly sharp, intelligent man looking at the same data we're all looking at. He's got one view. I can find you someone just as sharp, just as intelligent, who has a completely different view on what this Fed should do and where yields are going. Inflation data, some more information about 1 hour and 43 minutes away. Going into all of that, the scores look like this on the S&P 500. Equity futures at the moment just a bit firmer, off session highs up by 0.1%. The S&P at the close yesterday, 3-day winning streak on the S&P 500. Let's see if we make it 4. Let's just look at the bond market quickly. Yields totally unchanged, 373.57, and one eye on Europe all morning because of what's been developing potentially over in China. Our reporting here at Bloomberg suggesting they are considering a broader package of stimulus measures. That adds to some recent reporting of ours suggesting they do something to support the property market. Our team learning it might be broader than that. So the euro's stronger, just short of 108, reclaimed that level a little bit earlier. And TK, I have to say some data out of Germany, investor confidence doing a little bit better as well. So we're getting whipsawed in one direction than the other.
Reading Whipsawed here with Damian Sassar right now. Here's what we're going to do, folks. We're going to talk to Mr. Sassar, expert on emerging markets, about China here for 2 questions, and then we're going to turn to the reach from the Country Club of Brookline to a place out in Los Angeles where it is a new golf world for a U.S. Open tournament. John's going to lead that discussion here. I got 2 questions on China, and then we're going to go to this sport blowing up in America. How scared is Beijing with these actions? When you look at EM pricing, the litmus paper that is the Damian Sassauer system, what does it signal to Beijing?
Yeah, I think they're getting nervous here. At 7.15 with dollar yuan. I mean, 7.15.
Rapidly to 7.15.
There's a lot of dollar sellers in China, big corporates who are, naturally dollar sellers that are protecting the yuan right now. If we get to 7.20, that means they've kind of lost their coffers here. And I think that's a real risk. And I think the PBOC may be trying to get in front of the Fed here a little bit, just by some of the stimulus, by the repo rate cut we saw overnight, the fact that it means you're going to see the 1-year MTLF probably decline by another 10 basis points this week. And look, I mean, the fact of the matter is, if you look at U.S.-China 10-year yield spreads, which had collapsed to like negative 81 bips, we're all the way back out to the lows of negative 112, and we may not have reached the low yet. I mean, I never would have thought we'd be widening from those levels. We may see it widen even more.
Just because of the sports thing, I'm going to ask one more question on China. We're going to pick it up on this amazing U.S. Open we're going to see. What is the adjacency effect here? Chapter 42 of every emerging market book is watch out for adjacency effects. What's the China conundrum? What's it mean across the Pacific Rim, frankly, from Australia to Japan?
It's simple. I mean, you basically have euro rallying. Every time you see China growth and stimulus, you're going to see the euro rally because it's a growth currency. You're going to see, you're basically going to see commodity prices rally, which we're seeing overnight. We see iron ore and we see copper prices rallying about 1.62% overnight. So, you're going to see stuff like that. I mean, the reaction amongst, global asset prices is pretty much there. But will it work? I mean, this cut, what are we talking about? Adding, 10 bips to GDP growth for full year 2023?
Well, John, you mentioned the literature this morning as it is that, so what? It's like a little bit of a move.
And sentiment is conditioned domestically in China to the point where they just don't trust, with the unexpected policy activity we've seen over the better part of the last 3 years in China. Households and corporates just don't trust what they're seeing here, and I just don't see it really working at this stage.
I'm reading Bramo's mind. Just like, do we have to talk about golf so quickly? Can we squeeze one more China question in, Bramo?
Yeah. I mean, there's a larger question here, especially as China's been trying to chart its path in the global emerging sphere with all of its Belt and Road, et cetera, et cetera. How much can they continue to do that when they're struggling to support their own economy, when they really have a situation where they're not necessarily bolstering growth, but avoiding something that's much more negative?
If you look at the credit data overnight, which just came out, it's very, very weak. I mean, weaker than you would have ever seen, seasonally speaking. And look, we have activity data coming up this week, Thursday or Friday, I believe. I mean, it's going to be even weaker, right? May was a bad month. You have that resurgence of COVID in Shanghai, a partial lockdown there, some of the other top-tier cities. So it's weighing on industrial production, retail sales, fixed asset investment. I mean, it's all going to be weaker on a sequential basis at the end of the week.
So the Segui here, John, is the Lanhai International Yangtze Dunes Golf Course. It's the #1 golf course.
That's how we're making
China.
a move.
That's our Segui here.
I was going to say geopolitics, tension, captured by one group teeing off on Thursday at 1:54.
Yeah.
Brooks Koepka, Hideki Matsuyama, Rory Talk to me about the significance of Rory McIlroy
and Brooks Koepka.
Big being in the same grouping for the US Open on Thursday?
I mean, it's pretty significant. I mean, did you see the presser? Matt Fitzpatrick, who won the US Open last year, I mean, he had his presser ahead of the tournament yesterday evening. My God, the questions on him, the poor guy. And he actually, we had Mike Wan on Bloomberg Business Sports last week. He's the CEO for the USGA. And thank you. And basically, effectively, he had the same question that Matt Fitzpatrick had, which is, who am I working for? I'd love some clarity on who do we work for? And I think that is where the rubber meets the road here. Are you working for the PIF, the Saudis? You're working for the PGA? I mean, if you listen to Jay Monahan, who is the commissioner of the PGA, he says, no, we're the majority shareholder here. PIF is the minority shareholder. We have control over what's going to happen next. I don't know. Money speaks louder than words.
Well, you tell me, what's the importance of Saudi Arabia being involved in American sport? It's in the headlines. We're all aware of it now. But if you think about the significance of Saudi Arabia in the US economy, it's already massive.
Absolutely.
For a long, long time, the biggest refiner in this country has belonged to guess who? Yeah. Why aren't we focused on those things? If this is such a concern, shouldn't that be a bigger one?
Exactly. I think what it is quite frankly, the way we've seen in technology, what the Saudi approach to sports is to disrupt the existing, infrastructure. I mean, you think about the PGA, that's just one sport where there's no salary cap. There's individual players. Think about Major League Baseball. Think about college sports with NIL. They can create dream teams if they got behind a real university here in the U.S.
Right.
With all the new rules.
The heart of the matter is last year at Brookline, should the non-LIV people be compensated now? Should they get a one-off bolt-on payment to equate to what the LIV people got?
Matt
Where are we on
Fitzpatrick
that?
was asked that question
yesterday,
and he politely refused to answer
okay,
it.
but
which tells you everything you need to know.
You've got to answer it.
Of course. So, look, it's going to be very difficult to give them any sort of compensation for not moving because, quite frankly, you're talking hundreds of millions of dollars here. So,
well,
and we don't know,
a rounding number for Saudi Arabia.
And we don't know what was paid out to the LIV golfers yet. We know the numbers. We know that Phil Mickelson was supposed to get $500 million, but how much did he really get? And is that contract still valid in this new regime? In this new environment, who knows?
There's a much bigger, broader story here that I think we have to pay attention to, and I'd fold in Lionel Messi and his potential contract with Inter Miami as well. Getting a slice of the TV rights. If you think about what was behind LIV Golf and why the likes of Bryson, Brooks went over there, these guys turn up, they know they're the draw. They know that's why people are watching. I mean, I watch for Rory. I watch for Thomas, I watch for Spieth. I don't watch for the rest of them. And if they don't win, they don't get paid.
Yeah.
And the guys who went to LIV Golf were saying, well, we're the draw. We want a slice of the money, a bigger slice of the pie. If we're going to turn up and give you 4 days of work, we know we're the draw. People watch for us. We've got the personalities. You might have the long game, whatever it might be. I think it's interesting to see Messi say, I know I'm the content. I know you make money from me, not just from selling jerseys, but also through the TV rights. I want a slice of that.
Yeah.
Interested to see the golfers do the same thing over the last 12 months. And I wonder how that materializes the next few years. The next times we get a big TV deal with golf, which players step up and say, well, hang on a second. I might not win on Sundays, but I know people watch for me.
Well, what's to stop Jon Rahm, Scheffler, Tiger Woods from breaking out with some Blackstone money and starting their own league, right?
Totally.
The precedent's now been set.
Are we trying to make news here?
But I will say this. You mentioned, UK, how wonderful it is, raising your kids there with a British accent. I'd rather get the draw of Kaylee Lines. I'd rather be in Miami. I think Messi has it right personally, Jonathan. I mean, the Argentine diaspora. Yeah, Miami's going to be fun with Messi there.
I imagine, I don't know this for sure, but I'd love to talk to Messi's accountant. The tax cut you might get coming from Paris to Miami could be interesting too.
Had nothing to do with it. Love of the sport.
The love of the sport. And apparently his wife had something to do with this as well.
Lisa, you want to weigh in here?
For good reason.
Yeah, this was brought to you by the Florida Chamber of Commerce.
There we go. Damien, good to see you, mate. Always fantastic. Thank you. Damien Sasser of Bloomberg Intelligence.
Great brief.
And Bloomberg Business of Sports podcast. The business of all of this, TK. I think it's going to be so interesting now for a long time.
What's so important here, like take Derek Jeter. Could he have gotten an equity interest in all this other stuff you're talking about? And yet here's this revolution, and I'm still humbled by the opening of betting. That now you can bet anywhere on anything in the 7th inning of a baseball game. And the answer is the stuff you're talking about, John. It's not outlandish. Where, Messi gets a jersey cut or, the other stuff as well. That to me is a big thing.
Whaley of BlackRock coming up on this equity market. Equity futures right now on the S&P 500, just about positive. We are 94 minutes away from economic data in America, a read on US inflation, a day away from a Federal Reserve interest rate decision with Chairman Powell and the team down in Washington, D.C. From New York, this is Bloomberg.
it's extremely difficult for the central banks to get a handle on just where it goes from here.
The data supports that things are weakening, and I think the Fed's going to pause.
Usually when you got a Fed funds hike cycle, of course, equities sell off.
Wednesday could be a landmine if they sound more hawkish than expected.
This is a Fed that doesn't like to surprise. Unless the CPI numbers are just absolutely wild, they're not hiking this week.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
That's CPI data 90 minutes away, live from New York City this morning. Good morning for our audience worldwide. This is Bloomberg Surveillance on TV and radio. alongside Tom Keene and Lisa Abramowicz. I'm Jonathan Ferro. Your equity market doing better than good to kick off the trading week yesterday. This morning, we are positive by 0.1% on the S&P 500 into CPI data, another read on US inflation. Then TK after that, going into the Federal Reserve tomorrow.
They're linked together, there's no question about it. We'll have our complete coverage tomorrow afternoon for you. Great lineup to be had. Everybody publishing this morning with Wei Li coming up. I think we're going to be really on top of this story. And John, this is George Saravelos at Deutsche Bank, and he says simply inflation turning a corner. He goes through PPI, CPI, ZPI, DD, all of them. He goes through all of them, and he says there is a demonstrable reality, inflation turning the corner.
Not heard of DPI before.
DPI was very good. CFA level 4.
Break that one down for me a little bit later. We're talking about CPI over at Citi. Andrew Hodenhorst publishing just moments ago. He said the Fed practices an extreme data dependence. It means 0.1 percentage point one way or the other relative to 0.4 month-on-month projected core inflation. Could be the difference between a hike, Lisa, and a skip on the FOMC tomorrow.
Is the Fed practicing extreme data dependence? That's what I would ask. If they are, what data are they looking at? Is it really just CPI, that the roll of the dice of whether it's 0.1 percentage point difference one way or another is going to determine the hike or a skip? A lot of people think that the bar is a lot higher than that. I think Andrew Hodenhorst is more on the sort of err on the high side of hiking camp than others. That said, it shows just how little security people feel in their view right now.
Yeah, he's out of consensus.
Exactly.
And he's stuck with that call for a while. He's looking for 25, then maybe another 25. We're seeing a lot of people, though, capitulate on their views mid-year. The mid-year outlooks are coming through in the last couple of days, the last couple of weeks. Just on equities, you see it from B of A. New year-end price target 4,300. That was from the end of May. Evercore go to 4,450. That was at the start of June from 4,000 previously. Goldman joins the party over the weekend. New year-end price target 4,500. The previous, Tom, 4K. We've had a big move year to date in the equity market. It was meant to be the other way round. Remember the story coming into 2023? You were meant to dip, then you were meant to rip, and then markets, TK, have just ripped.
The heart of this is buy in the rumor, disinflation, inflation turning, sell on the news. Is that point going to be this morning? I don't hear a lot of people talking about that. We've got a bid on NASDAQ this morning. The VIX has come back a little bit from the joy of 13 back to 14.98. But, buy rumor, sell news. You wonder if it's that kind of Tuesday.
I was going through the year so far yesterday evening, Tom. January, soft landing. February, no landing. March, hard landing. April, credit crunch surely. May, it's just mega cap tech. Then June, it's a bull market, Bramo. It's a bull market. What a turn, month to month. It's just been unreal.
We can see that reflected in the volatility, but not where we end up. I saw you put that out on Twitter yesterday, and I laughed out loud because it's so true. It's just been a whipsaw kind of feeling. And I guess which narrative is going to rule the day, which is going to be the right one. You could pick the data and show that it's confirmed it or not. Right now, very little conviction to remain bearish. And that, to me, is interesting. And when people do remain bearish, how much hate mail does Mike Wilson get? I just want to know how much people come out and they're like, you've been like this forever and you're wrong. Why won't you capitulate?
He got the hate mail when he was right for the whole of last year, too.
100%.
There's no winning. There's no winning. James Athey of Aberdeen called it ping-pong narratives, Tom. Just sort of back and forth,
yeah, I like
back
that.
and forth.
Just for the record, Wei Li never gets hate mail.
Well, why would Wei Li get
Wei Li would never get hate mail.
Wei Li alongside us in the studio.
Yeah, well.
We'll get to Wei Li in a moment. Wei, good to see you. Equity futures right now on the S&P positive 0.1%. Just a little bit of a lift, Lisa, in the equity market going into CPI.
CPI coming out at 8:30 a.m. Very curious to see May core CPI, how much rents are driving that CPI print lower as people do start to push back a little bit. 10 a.m. U.S. Treasury Secretary Janet Yellen testifying in front of a House committee talking about trying to support support the IMF and World Bank against China's grip on potentially aid to the developing world. And at 3 p.m., the former president, Donald Trump, expected in a Miami federal court at 3 p.m. We will be catching up with Keely Lyons throughout the day, who is down in Miami, John.
Wei Li with us around the table. Lisa, thank you. She joins us from BlackRock. Chief Investment Strategist, Global Chief Investment Strategist. Wei, good to see you.
Good to see you.
Let's just start. Mid-year reset. Are you resetting or retaining the views that you had at the start of the year?
Well, let's take stock of where we are. Right at the beginning of the year, we called for recession coming, and we called for persistent inflation. We're going to see evidence of that very, very soon. What is likely going to happen, consensus is looking at 0.4% core CPI sequentially, right? So that's supported by still persistent goods inflation as well as still persistent service ex-shelter inflation. So inflation is proving persistent. Yes, of course, rents component is driving that down, but we're still looking at the end of the year, 4, 3, somewhere in between, but certainly above their target. And when it comes to growth, we called for recession coming at the beginning of the year. And if you look at a combination of GDI, which is the GDI and GDP, which are two different ways of measuring economic activities in the country. If you average them, which is a fair thing to do, we have already seen 2 quarters of consecutive contraction. And then last week, we had a revised European GDP that points to recession. Germany is already in recession. So recession is, is coming, but maybe already here, right? But the bottom line is there are investment opportunities to be made, to be identified in the context of growth slowing down and persistent inflation.
Let's get out front to the investment opportunities. In your research note, your nuance, a distinguishing feature is this phrase, economic damage. I think we see economic damage in China on a relative basis. Do we have enough BlackRock economic damage now that we get an impulse of global disinflation?
Well, in China, we have seen inflation surprising on the downside. And I think that is also why they cut rates, which is a bit of a surprise this morning, right? The open market operation rate, but it's just 10 basis points, which is very little in comparison with the inflation downside surprise. So there could be more rate cuts coming. We're expecting more rate cuts in the medium lending facility and also in the loan prime rate department to a similar magnitude. But the bottom line is the Chinese restart momentum is not as powerful as hoped to start with, and that is putting our previous expectation for China growth to come above 6% this year at risk, and we brought that down to just marginally below 6%, which is our current expectation. But even that is dependent on easing coming. They have policy space, they have fiscal policy space, they have monetary policy space, but they may be very reluctant to use that in a very aggressive way.
Based on that, do you think that the trade, the piling into European equities is overdone?
Well, we have seen indeed lots of inflows into European equities, and European equities have done well so far this year, thanks to, I think, China restart excitement, as well as the fact that energy crisis didn't materialize thanks to lower energy prices, and then also the milder winter. But Europe is facing a similar supply-constrained challenge, facing, recession on the one hand and persistent inflation on the other hand. So I think the way to stay invested in Europe would again be in a very selective way through quality bias, which is how we are looking at the U.S. equity allocation as well, where on the one hand we have a modest underweight, on the other hand we have a significant kind of tilt into quality. And guess what is the single biggest name in the U.S. quality index is NVIDIA.
Well, that actually is sort of the redefinition of a lot of different characterizations. As people say defensive, Apple is defensive. But, as you're talking, you say recession might be here. It might just not feel that bad. And I'm wondering if that's the case, how are you resetting the rest of your year, your mid-year outlooks? How much are you revising upward your risk tolerance, your willingness to pile into some of these names that you've liked?
That's a great point. So our mid-year outlook is going to be released in 2 weeks, and I look forward to coming back and talking about it. But the bottom line is indeed the macro environment is taking shape, and there is an element of to what extent macro damage is priced in markets. But then in addition to the cyclical macro assessment, our we're going to have a recession or not, and this is very debatable. If you look at kind of market views out there, there is also the structural kind of mega forces that come on top of the cyclical considerations. So if you think about so far this year, I know we talked a lot about it at this program, the narrowness of U.S. equity market rally. That is not a macro story so far. That is a Megaforce AI story. It's a concentrated thematic play, which again, I think by being selective, we can capture.
You mentioned NVIDIA. I wouldn't usually pick up on single names with you.
I also don't want to.
You went there.
If possible, that's a factual statement.
The stock is up by 170%. We've seen $600 billion plus of market cap added to that company. And to hear you call it quality, can we just tease that out a little bit? And you can go specifically to NVIDIA
I'm not going to
or
talk
a
about
basket of AI
name.
stocks, but why are they quality stocks?
Yeah, when you think about quality characteristics, right, which is what the quality index selects names based on, we're talking about pricing power. We're talking about cash, the ability to generate free cash flow. We're talking about the ability to kind of grow margin. And these are the sort of characteristics we want as growth slows down. And we are in an environment where growth is slowing down. And as we kind of think about being selective, we actually ended up with names that also happen to be the sort of names that markets have favored so far.
Like NVIDIA. Wei Li of BlackRock. Wait, good to see you. You said it, not me. You said it, not me. I mean, that's something
it's a factual statement. Don't get me in trouble.
You should be proud of it if you did pick up that name, TK.
Rick Reeder's over at the shop right now going, why in God's name is Wei Li talking about NVIDIA?
No, it's great. It's an advertisement. If they picked up on that ahead of time, then it talks about the screening model and what that does.
What a move.
It's in the MSCI Quality Index. It's all factual.
There we go. I trust you, Wei Li. I trust you. TK, what a move it's been year to date. It's
so narrow, and Wei Li is at the bottom of a research note, a bar chart description of different entities like energy and all the fixed income of BlackRock and equities. And we forget until we see a graphic representation, the loneliness of equities, the loneliness of tech equities is the one big thing that moved.
That's the theme into June.
The one big
Can it broaden out? The regionals, the banks, the regional banks in the US so far, month to date, up around 12%. So far. A bit softer yesterday, but a strong start to the month of June and a big conversation on Wall Street as to whether that narrow rally can broaden out into year end. Equities right now, futures positive. Inflation data in America, 1 hour and 20 minutes away.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. In Miami, police say as many as 50,000 people could turn up when former President Trump appears in federal court today. He's expected to plead not guilty to charges involving the mishandling of classified documents. Trump loyalists have promised a show of force. The latest U.S. inflation figures come out today, and Bloomberg Economics says the data are likely to give support to Federal Reserve officials wanting to put their tightening campaign on pause this week. It's estimated that core inflation rose 0.3% last month, a slowdown from April's increase. France's President Emmanuel Macron says he hopes Ukraine's counteroffensive is successful and will lead to negotiations. Macron and the leaders of Germany and Poland, they met in Paris. They discussed coordinating military assistance to Ukraine and the upcoming NATO summit. A big transaction in agribusiness. Bunge has agreed to buy Glencore's Viterra for $8.2 billion in stock and cash. Now, Bunge also will assume $9.8 billion of Viterra's debt. The deal will create a trading giant capable of competing with the world's biggest agricultural players. And in pro basketball, the Denver Nuggets have won their first ever NBA championship. The Nuggets beat the Miami Heat 94-89 to win the best-of-7 series 4-1. Nikola Jokic led the Nuggets with 28 points and 16 rebounds. He was named the series' most valuable player. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Lisa Mateo, and this is Bloomberg.
It is a very tight very detailed, evidence-laden indictment. This is vanity run amok, Anderson. Run amok. Ego run amok. And he is now going to put this country through this. He's saying, I'm more important than the country. These are my papers. Did someone remind him he's not the president anymore? You don't need these things anymore.
The former New Jersey Governor Chris Christie not holding back on CNN yesterday evening. Some Republicans, including those in the running for the presidency in the next 18 months, TK, holding back, being diplomatic, trying to walk a fine line. Governor Christie, I think, understands what his role in these primaries is going to be, Tom.
That's the way it is, yeah.
And he's going all in.
And everybody has a role. Everybody's playing a part right now. And, the cliche is they're all running to be a cabinet officer or vice president of whoever takes the trophy. But the shock there of that town hall, so different from what got Mr. Lick shown out the door. I mean, it was really, really something.
Well, different character.
Yeah,
Tom, I think the former
different
governor
tone,
of New Jersey
different character,
conducts conversations in a different way to the former president.
Well, there it is. Chris Christie, and I'm sure there'll be many more voicing their opinions through this historic day for the nation. We lead with Anne-Marie Horton, our chief correspondent in Washington. Anne-Marie Horton in the nation's capital, and Kaylee Lines in Miami, moving towards 3 p.m. This afternoon. Anne-Marie, let me start with you. Kaylee's down there with the granular of the moment. What happens on Wednesday? Anne-Marie Horton, what happens next here within this process?
Well, I think what's going to happen immediately following this is we know that the former president is trying to make this almost a campaign event. He's going to be flying back to Bedminster, New Jersey. He's going to be giving a speech. And then his campaign came out. He'll be having dinner with donors, and he wants to raise $2 million following this arraignment, this historic arraignment that's happening in Miami. The next few days, weeks, months in the Trump world, what the reporting is overnight, whether it's The Guardian or The Washington Post, is that he's still scrambling to actually find his lawyers. So that's going to be part of the process. And then obviously, this story will continue. It's not like this is going to be wrapped up anytime soon. Yes, Jack Smith on Friday, when he came out for that press conference, said he wants a speedy trial. But the Trump team is going to try to slow this down. So we're going to be talking about this for the rest of 2023 and the rest of 2024.
Kaylee, John Ferro mentioned this earlier this morning. Does the former president of the United States have representation at today's 3 p.m. arraignment?
Well, we know that once the president arrived here in Miami yesterday, Tom, he spent the afternoon interviewing lawyers trying to add someone from here in Florida to his legal team. And what The Guardian is reporting this morning is that those efforts were unsuccessful. So he is going to have to be represented by his existing attorneys, Todd Blanche and Chris Kise. Of course, this is after two of his attorneys, Trusty and Raleigh, resigned on Friday immediately after this indictment. So the representation still very much is a question. As we know, this isn't anything necessarily unusual for the former president, considering he really has had a revolving door of lawyers over the course of the last several years. But as he faces federal criminal charges for the first time, it doesn't seem that his legal team is fully filled out at the moment.
Well, Kaylee, can you just elaborate a little bit on why the current legal team isn't sufficient, right? I mean, he does have lawyers representing him. What was he hoping to find in his interviews?
Well, someone who could represent him here in Florida specifically for this arraignment to take place today. But Chris Kise is technically from Florida, so I believe for one day only he's going to step into the role as being from South Florida. But of course, this just really becomes an issue of someone who wants to take on this case for the former president, as we're talking about 37 counts of 7 different federal criminal charges, an indictment that was unsealed on Friday that really paints a narrative about what exactly happened with these documents he took from the White House, where they were stored in the shower, in the bathroom, conversations he was having with staff regarding whether or not he had the ability to classify them, saying things like, wouldn't it be better if the documents didn't exist at all, showing them to others who didn't have security clearances while they were in his possession in 2021. So it's definitely a difficult case for the defense to fight, maybe why he is having so much difficulty finding someone to take that challenge on.
Anne-Marie, we saw earlier this morning Kevin McCarthy, a rehash of his comments on why it is worse to keep some of the records in a garage rather than a bathroom because the bathroom door locks. What's been the response in Washington, D.C. to the Republican rhetoric around the Trump case?
Well, I think it really depends who you're talking to. There's been mixed results on the Republican side in terms of how they want to socialize and communicate about this case. Speaker McCarthy there clearly wanted to deflect and point the finger at the fact that there is this pending case against the current president, Joe Biden, regarding documents he had. Obviously, the difference between Biden and Pence and Trump is that once Biden and Pence found these documents, they immediately contacted the authorities, want them to come in and take them, physically wanted nothing to do with them. But obviously, the current president still has this pending case, which is quite awkward. And the speaker is just trying to deflect, saying that, bathroom doors have better locks. I think a lot of people were actually, quite frankly, laughing about it. But that was his answer. Then you have the likes of Mitt Romney, Senator Romney, who says, these are highly classified documents. This is absolutely inappropriate. What is more interesting to me is what the challengers to the former president amongst the campaign trail are saying. And Nikki Haley yesterday in a Fox News interview, of course, she was the former president's UN ambassador. She has amped up her rhetoric against him. And she even pointed to the fact that her husband, serving in the military and is about to be deployed, she said this puts all our military men and women in danger. If you're going to talk about what our military is capable of and how we would go about invading or doing something with one of our enemies, and she called it reckless. So some of them, obviously we heard from Chris Christie last night, but we knew what his rhetoric was always going to be. But there's others that are starting to now move closer to making sure that they are on the record talking about how dangerous this indictment was and how dangerous the former president acted.
So, MH, let's build on that. So we've heard from Governor Christie. Like you said, we know where he stands. We know where he's going. We know what role he'll play in these primaries. We've heard from Nikki Haley. What has Governor DeSantis said about this?
Well, Governor DeSantis took a very interesting tone on Friday. What he said that when he was in the military, if he did something like this, he would be ousted in a New York minute. So he made the case that had he done this, he knew what the consequences were. At the same time, he also wants to show that and not ostracize really the base of the Republican Party, which we've already seen. I mean, this weekend's poll from CBS News shows how strong of a hold the former president has on that base. He also talked about the fact that he does think the Department of Justice, the Democrats are weaponizing the Department of Justice and calling it Joe Biden's Department of Justice. But it was interesting that he said he would never do such a thing because he knew how strong the consequences was and how dangerous it was.
Kelly, just quickly before you run, just remind us again, when does all this kick off this afternoon?
3 p.m. Eastern time, John, is when the president is expected to show up at the federal courthouse. But before then, of course, we're going to be paying attention to whether or not any or how many protesters may show up. Miami police said they're bracing from anywhere between 5,000 to 50,000. Of course, President Trump has asked his supporters to show up today, John.
Kelly Knight, thank you. Kayleigh, AMH, looking forward to the coverage from both of you through today. Historic day, TK. We've said that so many times over the last 8 years with regards to the former president, Donald Trump. But truly, don't allow the events of the last 8 years to desensitize to you to what is playing out this afternoon at 3 p.m. Eastern time.
I mentioned the math yesterday here of Republicans being X% of the American public, and then what portion of Republicans are Trump Republicans as well. And it's amazing as this drama unfolds and we see thousands of people with Kayleigh lines in Miami today. What portion of the American public is that? There's a raging debate about that right now. I'm not going to opine on what the guesstimate is, but is it 5%, 10%, 15%? Dare I say even more, 20%?
Anne-Marie talked about the recent poll over the weekend, Tom. Clearly, he's weathering the storm with the base for the primaries.
How big is the base?
Does that help you win a general? Does that help you win in places like Georgia?
There's a movie about that.
Which has become really tight. More recently.
And then you've got the further litigation in Georgia upcoming, I guess is the phrase.
Precisely. Equity futures just about positive. 1 hour, 4 minutes away from inflation data in America. Three-day winning streak on the S&P 500, 60 minutes away from inflation data in America, just 1 day away from a Federal Reserve decision with Chairman Powell and the team. Going into all of that, the scores look like this on the S&P 500. Futures slightly positive through the whole of this morning, up by 0.1% on the Nasdaq. Decent session yesterday, up another 0.33% on the session. Year to date, though, as we get to the middle of the year, year to date, the Nasdaq up 35%, Tom, for 2023 so far.
Well, the single point on my terminal is the 2-10 spread, the vanilla spread, and this will be worth watching exactly at 8:30 here, 86 basis points. And it's going to be an important driver here of sky-high short-term yields and a lesser, we're going to talk long duration here, but I think it's really important to partition the short-term dynamics with the long-term duration dynamics.
Let's do that right now. Let's look at the short-term yield, very front end of the curve. Look at the 2-year. Going out to the 30-year. The 2-year at the moment, 458.59. Yields higher by almost a basis point. Yields lower by almost a basis point on a 30-year, 387. 10s, 373. On a 2-year at the moment on the month, up around 17 basis points, around 17, 18 basis points so far through the month of June. As we start to think about pricing out cuts, maybe pricing in hikes, let's see if that conversation changes in 60 minutes when we get inflation data. I can tell you the conversation in the UK changed this morning. So that's 2 a.m. Eastern time, 7 a.m. local time. You get wage growth data out of the UK. That drops bank. Sterling stronger. Cable 125.69. That's the pound against the US dollar, positive by 0.5%. So stronger pound, weaker dollar. Similar story on the euro side of things. Stronger euro, weaker dollar, just short of 108 here, and positive by 0.4% on that currency pair. So some dollar weakness out there, encouraged almost by the story as well that we had from our colleagues over in China, suggesting that China, Lisa, is considering now not just a package to support property, but a broader package potentially that could include interest rate reductions as well.
I'm old enough to remember the whole parity discussion on both those currencies. And now to look at sterling at 125, considering where we had been. A really interesting turn of events in the whipsaw. This is time for your artificial intelligence report. And we're going to take a look at Oracle. Shares popping after reporting earnings yesterday that beat expectations. They also increased their first quarter revenue growth that really went well beyond what anyone was expecting. Why? Because cloud growth is going to be fueled by artificial intelligence. Those shares up 5% ahead of the open to an all-time high. Taiwan Semiconductor Manufacturing getting in on the AI game. Those shares up 1.6%. I'm looking at the ADRs right now, regaining a $500 billion market capitalization. Apple sort of not really feeding into this because they already have so much this year. I mean, all of these names are up more than 40% so far this year, just to give you a sense of how much of a boom we have seen. Those shares slightly lower after a downgrade from UPS, not to a sell, to a neutral. And Manchester United, I thought that you'd want to really touch on this because basically, will Manchester United follow Man City with respect to their backing? Their shares up.
Nailed that.
Almost
read in on that.
More than 16%. Well, this is the whole back and forth. Will they or won't they be sold to Qatar sheiks?
I'll try and give you the cheat guide to all of this. So the bidding process has been going on forever. I've totally lost touch with where we are. I think we've had 5 bids from Sheikh Jassim.
This is a Glazer family of
Tampa Bay Buccaneers.
Yeah.
So we are in a situation where you've got Jim Ratcliffe of Ineos, big billionaire in the United Kingdom. Conversation about him maybe taking a smaller stake and that the Glazers retain some kind of smaller stake in Manchester United. The hopes and dreams of the shareholders, they get this big offer from Sheikh Jassim, the Glazers go away and Manchester United could spend money like Manchester City. They've been spending lots of money anyway, let's be very clear about that. That's where we are. There was some press reports a little bit earlier on that the Qataris may have secured the win. That bid might have succeeded. I haven't seen any clarity, any comeback from Qatari officials or Manchester United for that matter either. But regardless, the stock is up, Tom, in the pre-market in a pretty big way at the moment.
I think we need to do further research on this and its team surveillance to London to speak to Sir Jim O'Neill.
Or to Manchester.
Yeah.
Which is a little bit further north of London.
I would futures up 4, and it's core CPI Tuesday.
It is TK. Yeah. That data just around the corner, an hour away from US inflation. RJ Gallo of Federated Hermes weighing in, saying the CPI may bolster the appearance of sticky service inflation and reinforce the hawkish messages shared by Mester and Bullard. That said, we doubt that CPI will surprise sufficiently to counter Powell's pause signal that has already been delivered for this meeting. TK, I think Governor Jefferson out there as well, trying to reinforce the message from Chairman Powell too.
Really quite important, and a brilliant note from R.J. Gallo here as he manages money for Federated. He joins us now with Federated Hermes. R.J., I like how you say the Fed is wordsmithing, and they're going to have to change the tune off what we see here in 1 hour. Your bet, I love this, is long duration. You are optimistic about a disinflationary outcome. Define what you will look for at 8:30 to get to where you lean long duration.
Yeah, well, good morning. Obviously the CPI releases for the last 15 months have been huge market events, very exceptional, the inflation that we've been experiencing. Our view is we're looking at trend. I mean, it's hard to focus on any one number. I think it's been pretty well proven that the army of economists at the Fed, the armies of economists on the street, it's been pretty tough to call inflation. Certainly surprised to the upside. The disinflation that began last year seems to have maybe plateaued in the very near term. But when you bust open the data, there are certain portions of CPI that are much better behaved. You pull shelter out, you're seeing much more reasonable statistics. The Fed has made significant inroads in the battle against inflation, and we're really looking at the trend. We've been leaning long duration, not pounding the table saying buy all long bonds, but leaning long duration now for a number of months. Our view is we're past peak Fed, we're past peak inflation, and we're past peak growth. We're getting close to the time when if you don't start to lean long duration, you might miss out. You get that weak employment report, the bond market's going to have a really good day.
Link your world to the distant world of Stephen Auth. How do you link your bond world to the Auth persistent cash flow blue chip? Auth owns 142% in big tech. How do you link the two worlds together at Federated Hermes?
Well, I have to say we're more linked than maybe you realize. The equity and the bond sides of the shop, so to speak, certainly cooperate. I sit on the macroeconomic committee that's led by Phil Orlando, and Steve, of course, is at those meetings. Our views are not, they're really not too far apart. Steve's often been using the term rocky landing. Our view on the fixed income side, maybe we're using some more traditional phrasing, but we think a mild recession is still more likely than not. A mild recession could look a lot like what we saw back at the turn of the most recent century that we just got into, when you had an actual contraction of GDP, an official NBER recession, but the consumer never retracted. You never saw consumer spending have a negative growth rate. Yet other very interest rate sensitive sectors did deeply contract in the wake of the dot-com burst and the financial ramifications thereof. I think something like that might be in the offing later this year, and that helps to underpin the idea that starting to add duration to your portfolio, legging in, if you're in money markets, start buying some intermediate bonds. That's where we think, from an asset allocation standpoint, it makes sense. And within our bond portfolios, we're up in quality and leaning a little long duration, not max long or anything like that, but certainly beyond neutral.
What do you think would be a greater shock to the market right now, RJ? That we get a significant upside surprise in about an hour time with CPI, or a significant downside surprise?
Well, that's a great question. I think that calling inflation has been hard, as I mentioned before. If you look at the surveys, most are expecting a bit of a soft report right now. So, conventional wisdom would be if you start to get a stronger report, that might be a bit more of a shock. That said, I think the markets and the policymakers on Constitution Avenue have all been sort of wringing our hands about whether or not we've hit a plateau. I'd say the bigger shock might actually, despite the survey, be if you get a soft number. A softer number might open the door to many people moving in the direction I've just described. And it's now time to be adding some duration to your portfolio, and then the market obviously would reprice lower in yield.
A lot of people say that savings are almost up, and yet I saw some data, consumer savings I'm talking about, and yet I saw some data yesterday from Bank of America showing that savings are still considerably elevated from where they were pre-pandemic. At what point does that tailwind get used up, this sort of tailwind from the stimulus that was pumped into the system during the pandemic?
It's been extraordinary. When you think about the monetary and fiscal response to the pandemic, we are now dealing with the echoes of that, years later, and they still persist. The consumer has a lot of support. Number one, the unemployment rate, although it has ticked up, is just I think 0.3% off a 53-year low. So the households of America are, all in all, are in pretty good shape. You might have savings still left over from some of the fiscal policy relief money that came out in the COVID bills. You might have a job. You probably do. Most people who want a job have one. And wages have been growing at a reasonable clip. These are all the reasons to suggest there will be no recession. But again, I think the challenges in the banking sector, the disintermediation on the right-hand side of their balance sheets, the asset devaluation on the left-hand side of the balance sheets, the commercial real estate challenges that are evident by the fact that the building I'm in is probably about 50% occupied on any given day. There are many financial ramifications of this post-pandemic economy and the 500 basis points of Fed tightening that we think will continue to slow the economy, even if the consumer has some more savings, even if the consumer still has a job. Ultimately, employment markets will start to soften up, but we could have one of those recessions where the consumer is not the source of weakness, the other segments are.
Interesting. Very interesting. RJ, thank you. You know how this works. 10% rallies and it's back to a bull market, no landing. RJ Gallo of Federated Hermes, that's what it's felt like. He mentioned office occupancy, which reminded me of this story out from the team here at Bloomberg this morning. New York City office occupancy crossed the 50% threshold last week for the first time since the COVID-19 pandemic outbreak. Now, there's two ways of looking at this. One is that great news, people are back in the office. The other is that it's 50% and it's only 50. Just got back there. That's amazing. That's amazing.
It's game changing, and this is maybe the biggest conundrum I don't have a belief in. I really don't know where we are a year from now, 2 years from now, 5 years from now, on this national issue. I mean, this is a huge. To borrow from the great historian Bernard Bailyn, it's the depeopling of cities.
Yeah.
That's what it is.
If you'd like the source for that data, it's from security firm Castle Systems. It's up 4.2 percentage points from the week before. Let's see if that trends in that direction through the rest of the summer. Equity futures on the S&P just about positive. Coming up next, Jack Lew, the former US Treasury Secretary, a conversation you do not want to miss, going into inflation data around about 50 minutes away.
Keeping you up to date with news from around the world. With the first word, I'm Lisa Mateo. Former President Donald Trump will appear in a Miami court today to face criminal charges. Miami's police chief said they are prepared for crowds of up to 50,000 people. Now, Trump is expected to enter a plea to a 37-count indictment accusing him of mishandling classified documents. There are more signs that China is increasingly concerned about a slowing economy. Bloomberg's learned that Beijing is considering a broad package of stimulus measures. Meanwhile, China's central bank has unexpectedly lowered a key short-term interest rate. In the UK, Labour Party leader Keir Starmer is taking shots at Prime Minister Rishi Sunak's Conservative Party and an ugly fight between Sunak and Boris Johnson. Starmer spoke with Bloomberg at London Tech Week.
Everywhere you go across the country, most people are really worried about the cost of living. They're worried about how they're going to pay their bills. And for them to see a government squabbling with itself instead of focusing on what they need addressed, I think is, a very serious situation for this government to have got itself into.
Recent polls show Labour is well ahead of the Conservatives. The next election is likely to be in 2024. And shares of Oracle are at a record high. The company projects that its cloud computing business will continue its rapid growth in the coming fiscal year. Oracle's cloud sales gained 54% in the fiscal fourth quarter. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Lisa Mateo, and this is Bloomberg.
I'm very hopeful that the Fed has done enough, and I think if they keep hiking, they'll have done more than enough, and the recession will end up being deeper and longer than it needs to be. This is a Fed that doesn't like to surprise, so I'd be quite surprised. Unless the CPI numbers are just absolutely wild, they're not hiking this week.
Let's see if we get some wild Absolutely wild. CPI numbers in about 44 minutes. That data just moments away, just around the corner. We'll break that for you here on Bloomberg. Mike McKee's going to do a great job of that for you. Always does. Then it's onwards to the Federal Reserve decision tomorrow afternoon. Going into all of that, your scores look like this on the S&P 500. Equities pushing just a little bit higher, but fading as this session grows older. We are positive now by 0.06%. If you're looking into the FX market, just a weaker dollar out there at the moment, Tom. Through G10 against the euro, against the pound as well. The euro here just short of 108 at 107.94.
On this day of CPI, and clearly an important day of inflation data in America and to be observed worldwide, it is good to speak to any Treasury Secretary. Janet Yellen's occupied, so we'll do better with Jack Lew, the former U.S. Treasury Secretary, joins us this morning. Jack, thank you so much for joining Bloomberg and Bloomberg Surveillance. I'm going to cut to the chase. You were weaned on Joe Moakley out of Boston and on the great Tip O'Neill. And Tip O'Neill understood that technology drove things forward. He was a believer in the big system, the big vision. We come out of a pandemic. We have sky-high inflation and the dynamics changing. Is this a normal inflation? Is this a normal dynamic that we should fear? Or can it lead to a better disinflationary trend, better productivity, and better growth?
Well, good to be with you, Tom. And I think it's fair to say that there's nothing normal about going into or coming out of COVID. It was an extraordinary period that required policies that no one had ever had to think about in our lifetimes before. So I don't think there's any surprise that coming out of it, it's a somewhat bumpy path with somewhat unpredictable duration in terms of where we're headed and how quickly we get there. I think what's clear is that there's been a trend down in inflation. You know, a lot of the inflation that was supposed to roll off slowly rolled off. But what's left behind is a lingering higher inflation rate than we would like. What we don't know is when all of the measures kick in, all of the higher interest rates, all of the effects of bank failures, where will we be? So I think the cautious approach is still the right one. We have room in the economy for some tightening. Unemployment is very low. We still have a strong economy, but we're headed towards a slower patch. There's no question about that. And the question is, will it or won't it become a technical recession? So I think the data does matter, and I'm not sure today's news will be the last word.
Jack Lew, the painful thing, and my colleague John Ferro mentioned this on London and the rest of the United Kingdom in the last hour, there seems to be a separation in America, a two Americas that John Edwards talked about, an advantaged technology front America that really doesn't care about inflation, and then another America flat on its back. How separate are our two Americas now economically?
You know, that's a good question. And I think there's lots of data points that show that it's a growing separation and a real problem. You know, you were talking a few moments ago about savings rates and what are the residual savings from pandemic support and from lower spending when people couldn't go out. It's very different if you're at the top or the bottom of the income spectrum. At the bottom, that savings has been gone for a while. At the top, it isn't going away anytime soon. And I think that has a lot to do with what people can buy and what people can buy those things. So we do have to ask how are different parts of the economy faring.
Although I do wonder how much the fiscal impulse is going to be severely constrained. Do you think that people appreciate how much the recent debt ceiling negotiations will constrain further fiscal spending? Or do you think that it basically was a Band-Aid over something and basically didn't change the narrative in any way?
So, Lisa, I think there will be lower spending on the appropriated side. That's going to have an impact on things that are very important in terms of providing services to the American people. So I don't want to say it won't have any fiscal impact, but the whole debate was over a small slice of the budget. It wasn't over revenues at all. It wasn't over the large entitlement programs at all. So I don't think we should confuse the size of that deal, which was on the order of $75 billion a year for a couple of years of restrained spending, with what a true package of fiscal consolidation would look like. I think the question going forward is, will there be continued stability in terms of the federal government not creating anxiety that affects both how individuals and businesses see the economic outlook? Part of the agreement was a kind of technical legislative provision to put pressure on Congress to pass all of the appropriation bills separately, which they haven't done since I was at OMB in the Clinton years. Now, if that happens, everything will go smoothly. If it doesn't happen, you face the prospect of government shutdown, of cuts in defense spending. The noise coming out of Washington in the last few days suggests to me that we're not necessarily done with drama coming from our capital.
This is my shocked face. I do think that people are expecting a bit more in terms of drama on this front. At the same time, when you talk about instilling some confidence in C-suites of some predictability, I do wonder your response to future bank failures at a time when a lot of people are saying, basically, for all intents and purposes, there is a backstop, at least to depositors, basically promised by the Treasury Department and interference promised by the Fed.
Well, look, I think regulators and Treasury have made clear that they will do what they have to prevent systemic crisis from occurring. They haven't been terribly clear over whether that means in every single case. There are continue to be normal workouts of troubled banks. So not everything is in the case of the regulators will step in. Look, I don't think we're done seeing the impact of higher interest rates on pressure on financial institutions. You add to that the pressure that comes from commercial real estate values being below where they were just a short period ago. So there's going to be some stress in the system. I think looking ahead, the thing that ought to happen is reflected in what policymakers have said, which is that there has to be more careful oversight of mid-sized financial institutions, particularly growing mid-sized financial institutions, so that we don't have as many surprises in the future. I don't know exactly what shape that will take, but I do think that's a very important discussion. And rolling back that oversight a few years ago, I thought was a mistake at the time. And I was glad to hear that thinking has changed back to we have to keep an eye on things.
Jack, one final comment. We've got to say happy anniversary. It's almost 10 years to the day that you unveiled a new signature. Can you believe that was a decade ago, Jack? Can you believe that was 10 years ago?
It is very hard to believe that it's 10 years ago.
Isn't that amazing, TK?
The signature is it's original.
Well, it's changed. Go on, Jack.
And I still get them when I go to the money machine.
That's gold.
The old ones, Jack, or the new version with the newer signature?
You get a pretty good. I only had one. There was only one signature.
Oh, so they never got the new. They never got the new signature on them.
They said we'd like a redo of this if possible.
Can I just say that you've given my children hope, because they often will say when we're trying to develop a signature, they will look at yours and say, "Look, we can be creative with it." So
the only thing I say is don't blame my grade school teachers. They tried.
Jack Lew, thank you, sir, for being a good sport as well. The former U.S. Treasury Secretary, Jack Lew. 10 years since he unveiled a new signature. TK.
Yeah,
10 years, a decade. That's unreal. How fast that's gone.
30 minutes away from this inflation report. This goes back to how time is moving on to where we were. George Saravelis alludes to this morning, to an interest rate structure back. What percentage of our audience, radio, TV, doesn't understand the traditional rate structure of before? And that's like time marching on.
Do you have a good signature?
Mine's not bad.
I can imagine that. Tom, you've got a good signature?
No.
It's not embarrassing. Let's put it down.
Mine is pretty embarrassing.
Yours is embarrassing?
Oh, yeah. I mean, it's not like a lot of circles.
That, though, the circles?
It's not quite circles, but it's definitely like
Do you long for the controversy of what was controversy in June 2013? I think it was Taper Tantrum, Ben Bernanke.
Yeah. It was sweet.
Jack Lew's new signature.
Yeah, well,
it's a different time. It's a different time, wasn't it?
Time has marched on, but this rate structure is we're 30 minutes away from this report. To use a Disney cliche, it's a whole new world after all.
We were all freaking out about tapering and the balance sheet of the Federal Reserve because it was too big, and then it's like quadrupled since then.
No one talks about it anymore.
Amazing. And it's been contracting at a fair clip as well, more recently as well. Equity futures right now just about positive. Inflation data 34 minutes away.
there's a lot of faith being put on the consumer, which means it's all being put on the labor market.
Wage pressure is diminishing, but it's still elevated.
If you wondered what a price-wage spiral looks like, I think you're looking at it.
I don't know that we're going to see this strength persist.
The problem is that the things have changed so much that there's clearly been this shift in the inflation psyche.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
Good morning, everyone. Jonathan Ferro, Lisa Abramowicz, and Tom Keene. Inflation of America. We will see that in 30 minutes time here. We've got a great lineup scheduled. Abby Joseph Cohen scheduled to be with us here after the CPI inflation report. We just heard from the former Treasury Secretary, Jack Lew, and those two, great and worthy of America. What do they see? They see disinflation.
What a difference 20 basis points could make, because the estimate is for year-over-year headline inflation to come down to 4.1%. Can you imagine the thoughts and feelings of people this morning if we had a 3-handle on headline inflation? The focus, of course, on Wall Street will be on core. We're looking for something like 5.2% year over year, month on month, which is a big focus for a lot of economists on the street and what that might mean for Fed policy tomorrow. 0.4% is the estimate, Tom, month on month. And a lot of people would conclude that's still too hot.
Which way does it tilt now, the so-called whisper number? I really don't have a feel. Alan Ruskin writes about an asymmetric CPI inflation report with Deutsche Bank, and I don't have a sense now if it's 0.4-ish on the month. I've never done this, folks. We're looking at month-over-month data. 0.4-ish. Is 0.3-ish a bigger deal than 0.5-ish? There's lots of issues there.
Lisa asked the right question. What would generate a bigger market move? Upside surprise or downside surprise, Lisa, going into tomorrow?
And what we heard there was potentially a downside surprise because people are still sort of girding for rates to remain high for a very long period of time. The difficulty here in understanding the trajectory is if you pull back and look under the hood, rents are decelerating on an overall basis at the fastest pace on record, right? So the inflation is coming down at a rapid pace. Is this backward looking, because you've already seen resurgence? Is this concentrated in a couple of cities, not New York, where we know that's not the case, right? I mean, all of these sort of vagaries, Tom, is really what's making it difficult to get a handle on.
What's so important here to me is the two Americas that we talked to Jack Lew about. I mean, Alberto Gallo was out with a great essay this morning, John. This inflation report, to fancy people, I don't think it's a big deal. It's like, yeah, okay, inflation's there, whatever. Let's move on with our savings that we have in a pandemic. There's a hunk of America, I don't care what the number is, they're still flat on their back, crushed by where short-term rates are off of where inflation is.
Let's attempt to put some numbers on it. You get some credit card spending data out of Bank of America.
It's pretty good,
the
right?
Spending on big-ticket items, huge. The bottom line is, their quote, consumers have rotated their major purchases from goods to services instead of pulling back on such spending altogether. In their view, this is a sign of consumer health because big-ticket spending tends to be highly cyclical. Big-ticket spending, Tom, still happening in this economy in a big way.
And yet, Lisa, you look at small business, and I know, Conrad de Quadros at Breen Capital is out with a summary of the NBI, the small business survey, and I guess there's some good optimism in it, but I think anecdotally we see a lot of pain out there with 3-month T-bills where it is.
Yeah, we did get the NFIB small business optimism number that came out earlier this morning, and it came in better than expected, still suboptimal, where there isn't necessarily complete optimism. Yeah. Right now, the difficulty is everyone's waiting for all of those savings to get used up. And they're not. They are still there. They are still higher than where we were pre-pandemic. The sort of tail effect of the stimulus. When does it get used up? It was supposed to be over already, and we're still looking at a pretty significant pile of cash.
We got rents, we got energy. My suboptimal data check, John Ferro, is West Texas Intermediate, 67, almost looking at a 66 yesterday, 68.50. That's cheap oil.
We've all got our home bias just to hear Lisa go through the rental stats, and you read my mind. It was like, really? Rents are coming down?
Right.
Rents are coming down, are they?
Well, but to that point, how specific is that in a couple of locations? In San Francisco. New York, different story.
San Francisco's got its own very specific problems. Your equity market right now, just about positive on the S&P 500. The data about 35 minutes away, 35 minutes and 28 seconds, with yields coming in about a single basis point. Tom, your 10-year 372.60.
Joining us now, Brian Levitt, global market strategist at Invesco. We got 8 ways to go here in this conversation, 25 minutes away from a key inflation report. How is Invesco, and critically, Brian, how are you adjusting mid-year to a nascent, perhaps disinflationary trend?
It's still an environment where investors should be looking for quality. We're not at the beginning of the new cycle yet. We're not at this big pickup in economic activity that's going to drive cyclical performance higher. So you've seen the larger cap, mega cap stocks do well. That's because investors are focusing on quality in what is still going to be a slowing economic environment. Quite frankly, the Fed's still raising rates, which we've never seen before in the aftermath of financial accidents. So, that's the roadmap for now. We're going to be looking for signs that market sentiment and that leading indicators are shifting towards that recovery trade, more cyclical, value oriented. I don't think we're there yet.
Are we in a bull market?
Well, we're certainly in a bull market for a handful of names. I mean, if you look at the broad indices, it's a bull market, but it's a very narrow concentration. As everyone has said, the top 10 names are driving a lot of that performance. But this is how these things play out, is that, look, we're still well off the peaks from where we were, prior to this inflation battle. We're grinding higher, and over the next couple of years, markets should do well. If you look historically, after inflation has peaked, after the Fed is done tightening, markets in almost every instance have done well over the next at least 2 years.
Brian, we talked earlier, John was mentioning some of the upward revisions that we've gotten from a number of different shops as they reassess the landscape heading into year end. How much have you changed your view and upgraded your expectation for stock returns?
Well, we were positive coming into the year, and the reason we were positive coming to the year is, inflation peaked last June. And so if you look in the years after inflation peaks, stocks tend to do well. So we're a year out now, and, pretty true to form, the equity market has performed well. Now, a lot of this has been driven, as we talked about, by higher quality names. Early in the year, it was all about the soft landing names. And lately it's been, more tightening, some struggles in the economy. I think that, ultimately we're going to move through the old high. But what we're looking for is signs that the composition of that is shifting. And what you'd like to see is broader market participation. So, what this narrow concentration says, maybe you have some potential near-term challenges, but again, ultimately the next couple of years are likely to be good for equities.
We've seen signs of that broadening out. What would give you a sense that it's sticky, that there's something real here in terms of the bid into regional banks, into financials in general, into consumer cyclicals?
Yeah, exactly. I mean, you'd like to see some normalization of the yield curve. You'd like to see more participation from emerging markets, deepest value names, cyclicals. You'd like to see stocks, meaningfully outperforming the quality bonds. So, we've seen some signs of it, but certainly not in all clear. And I think what we have to remember is, monetary policy works with a lag. 12 months ago, the Fed funds rate was 1%. And so, this is a market that knows that the lagged effects are still coming, and we've got an economic slowdown coming, which that likely precludes a big a new market cycle immediately, the early cyclicals and value taking leadership. We probably have a bit of time before we get there.
Let's go to 8:30 here, 20 minutes away, Brian Levitt. I know it's just one number. You're going to tell me you're going to look at a smooth moving average. It's TV and radio. What are you going to look at within the festivities here? What's the single thing that matters to you?
Well, the first thing I want to see is the year over year. I'm like everybody else. We want to see, how much it has come down. And there are some pretty good base effects that we're working on. So could we see a year over year that's in the low fours or even below? That would certainly be interesting. The month over month, as you had mentioned, certainly interesting as well. But also the components. I mean, this has been a progression. We've seen commodity prices fall. Of course, we've seen a collapse in the money supply. We've seen retailers rebuild inventory. As you talked about, we're starting to see rents come down. So it's all a process. There's still some parts that are hot. A lot of us sat at home or all of us sat at home for 3 years, and we're still spending money in restaurants, hotels, airlines, and that's because we have a low unemployment rate. But ultimately that'll start to shift. I'm pretty convinced this inflation story is in the rearview mirror. I'm pretty convinced that investors should be looking towards an economic slowdown, the end of tightening, the ultimate beginning of a new cycle, rather than being so focused on the inflation numbers.
Tell that to the airlines. Brian, thank you. Brian Levitt of Invesco. We're all living it. I was looking at some of the numbers, and Brian, thanks again. United Airlines, the CEO, looking at the potential of a pilot deal adding $8 billion in costs. FedEx yesterday, the union approving a tentative pact with 30% pay rises for pilots.
I am so glad
over at FedEx. I mean, we're still talking about this, Tom. Certain sectors of this economy, particularly that one,
right.
Very unique, I know, some very special things happening there, but these are big pay rises for these pilots.
I won't bore you with the anecdote details, but it was not a small business. It was a larger business, but not United Airlines. And the head of it said, every single marginal revenue dollar is going to labor compensation. He said every penny of it audited by their accounting staff.
Capacity coming anytime soon to the airline business, Bramo? Perhaps not.
Yeah, I mean, what's their incentive to do so right now if they can continue to charge what they charge? What I find interesting is that business travel has been going up, but a lot of business travelers are being forced to use economy who previously would use business because of how much the prices have gone up. And I just wonder, you know, people just are putting up with the discomfort of it because there aren't alternatives right now if you want to take those planes.
I priced an international trip yesterday, and I burst out laughing over how expensive
it was. That expensive?
I just burst out laughing. It's just numbers that were unimaginable 3 years ago.
And they're not coming down.
No, they're not coming down, and demand's there. And, you know, they're bringing on new airlines. I guess that's exciting. You see it when the guy O'Leary from Ryanair, I thought he was great when he visited.
You're still pushing him to go transatlantic.
Yeah, you know, I'll stand up.
I don't think that's happening anytime soon. You're going to stand up for 6 hours.
I'm going to stand up for 6 hours.
On a red eye.
After the third beverage, you wouldn't notice.
Yeah. You'd think you were standing up after the third beverage.
I don't know.
Yeah, that's different. In the next 30 minutes, the lineup looks a little something like this. Inflation data about 20 minutes from now. Mike McKee's going to break that down for you. Before we get there, we're going to catch up with Will Kennedy of our famed commodities team here at Bloomberg to break down what is and what isn't happening with crude. And then after that, Abby Joseph Cohen, professor at the Columbia Business School and, of course, retired Goldman Sachs partner. She'll catch up with us in about 18 minutes
She's
from
the
now.
toughest grader there. It's all C's.
You've got that on the
record. There's like 2 B's, 1 A was given out. She's brutal.
Who got the A?
Don't know.
The
She's
kid
brutal.
who got the internship at Goldman.
Nails.
Is there a bias there?
There's a Cohen
wow.
curve.
Big story here, T.
Quality C's.
From New York, this is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. Less than 20 minutes from now, the latest U.S. inflation figures come out, and Bloomberg Economics says the data are likely to give support to Federal Reserve officials wanting to put their tightening campaign on pause this week. It's estimated that core inflation rose 0.3% last month, a slowdown from April's increase. In Miami, police say as many as 50,000 people could turn up when former President Trump appears in federal court today. He's expected to plead not guilty to charges involving the mishandling of classified documents. Trump loyalists have promised to show a show of force. And France's President Emmanuel Macron says he hopes Ukraine's counteroffensive is successful and will lead to negotiations. Macron and the leaders of Germany and Poland met in Paris. They discussed coordinating military assistance to Ukraine and the upcoming NATO summit. Shares of Oracle are at a record high. The company projects that its cloud computing business will continue its rapid growth in the coming fiscal year. Oracle's cloud sales gained 54% in the fiscal fourth quarter. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Lisa Mateo, and this is Bloomberg.
I don't think we're done seeing the impact of higher interest rates on pressure on financial institutions. You add to that the pressure that comes from commercial real estate values being below where they were just a short period ago. So there's going to be some stress in the system.
And that's why for some officials at the Federal Reserve, they want to wait, pause, look around, see the impact of the cumulative tightening of the last 12 months or so, regardless of what the inflation data looks like in 13 minutes' time. We'll go through that data in just a moment. Going into it, equity futures just rolling over to about unchanged on the session. That equity market story's been fading now for the last couple of hours, I have to say. Session highs a number of hours ago were just about unchanged on the equity market at the moment. Going into the opening bell, 1 hour and 13 minutes away. Yields are just a little bit lower, down a basis point, 372.41. One theme in this market we need to talk about, crude, low of the week, 66.80 on WTI. We're off those lows. We're up 2% on the day, 68.
I didn't know we breached 67, really.
69, we saw 66
Wow.
Monday, yeah.
Stunning.
Yeah. It's been difficult, despite what OPEC Plus is trying to achieve in the other direction.
I believe it was oil down 40% or so off Saudi, but off Brent crude, I should say. But maybe it's a gallon of gas. For Will Kennedy, our senior executive editor, Energy and Commodities in London, it's a gallon of gas in London of $5.40. Here, $3.60. And Will Kennedy, it's a disinflation of a gallon of gas in America of 28%. I guess that's good news for all. What's the level of panic of OPEC producers right now, and frankly, U.S. producers? What's the sweat that we're reporting in this price decline?
I think there's still quite a lot of confidence among OPEC producers that this weakness, while very unwelcome, will prove temporary, and that actually they still expect a significant upswing in prices in the second half of the year. OPEC just released its monthly report, Tom, and it forecasts big deficits in the second half of the year. In July next month, when Saudi Arabia will introduce its voluntary 1 million barrel a day cut, they see the world short by 2.7 million barrels a day. That's almost 3% of total production. These are significant gaps, and they're expected to persist in the second half of the year. So I think there's some optimism. Surprise and disappointment that prices haven't responded yet, but some optimism that these are likely to be lows and we'll see some upswing from here.
How do you, on a global basis, and Will, you've been such a student of this over the years, where we say energy doesn't matter like it used to? I've never bought that argument, but can you and Javier Blas and our team suggest that energy is part of our inflation pie and disinflation pie is not as important as it used to be?
Well, I don't think that global GDP depends as much. Each unit of global GDP uses significantly less oil than it used to. And that means that oil prices don't have quite the economic impact they used to. And therefore, it's fair to assume that gas prices don't quite feed into people's overall baskets like they used to. They still matter hugely. I think one interesting question going forward is, will that relationship continue to change? Will the global economy become even less dependent on oil than it was? And if you look at the number of electric cars on the streets of China, I was speaking to a colleague there today who was in Beijing for the first time in this pandemic and was just overwhelmed by the number of electric vehicles on the streets of the Chinese capital. I think that tells you that the relationship between GDP growth and oil demand growth may be changing on a structural basis, and that's something that we need to understand better as we assess the likely trajectory of oil prices over the coming months and years.
This is really important, Will, and we've heard this from a number of people. Are you saying that basically because of China's shift to electric vehicles, they aren't necessarily going to generate the same kind of demand for oil that they have in the past, and that's the reason, or one of the big ones, that you haven't seen a rebound in pricing?
Look, I'm not saying that demand is going to suddenly plummet in China, but the growth of the Chinese economy may not produce the kind of uplift in oil demand that you saw in the past and that some people expected to see in the future. The relationship between economic growth in countries like China and elsewhere is changing and perhaps becoming a little bit weaker. I wouldn't want to overstate it, but I think it's something that people will want to understand better. And as the electrification of the transport system rolls out across the world and gathers steam at whatever pace, people debate how fast it will go, it will change the relationship between oil demand and global economic growth. Will
it change the relationship with commodities more broadly, Will? Or will we see a shift away from oil to, say, copper, for example, in places like China?
Yes, I think that it's fair to say that copper demand, the economy will become more copper intensive. I think people expect that. We need huge numbers of not just electric cars, which use a lot of copper, but power grids, which use huge amounts of copper. I mean, that demand will be there, and existing sources demand for copper will persist. So yes, the world may become a little bit less oil intensive, but it will absolutely become more copper intensive. these are fairly marginal. I wouldn't want to overstate them, but
Yeah.
we do see these relationships starting to change.
Hey, Will, thank you. Will Kennedy of Bloomberg on China, the commodity intensiveness of global growth, things we need to talk about, particularly as we discuss the potential for stimulus out of Chinese policymakers. Just on that briefly, Mike McKee with us around the table. And Mike, I know we're going to talk about CPI in just a moment. We all see these headlines that come from the PBOC, the Chinese central bank sometimes. There are all these different interest rates that they adjust 1 week, 1 month, 7 days. Sometimes I can't keep up. What have they done and what are they doing right now?
Well, what it seems to be that they're doing is cutting rates that would influence banks to lend to consumers, trying to build some domestic generated growth, as opposed to growth from fixed asset investment that you'd get maybe by cutting borrowing rates for borrowers, by cutting the overnight rate there in China. They have had a slow recovery from COVID in terms of domestic demand, and these rates basically free up additional money to be lent at lower rates.
Well, there's a different picture, different backdrop in China where there has been falling inflation at a much more significant pace. There hasn't been the same kind of problem that a lot of the central banks in the U.S. and in Europe and other developed world countries have been fighting. So how much does that really signal what others can do? Or is this very much a China-specific story driven by that disinflation?
Well, for the moment, it's pretty much a China-specific story because they have very low inflation and their demand is low, which is the opposite of what we're seeing in the more developed countries of the West. The one-year medium-term lending facility is their main rate, which they haven't adjusted in a while, and there is a thought that they would do that this week. But then we also have this story on Bloomberg today about a number of different stimulus ideas that they are considering, so that might put off an announcement of a medium-term rate cut.
How about this? I mean, I know you're going to get the first question tomorrow on the press conference with Jerome Powell. It's real simple. They have a dual mandate. We're completely fixated here 5 minutes away in the CPI report. Baloney. Are they looking at the labor market or are they looking at inflation?
Well, they're looking at inflation, the labor market as an input to inflation, but they don't have a labor market problem right now. They've met their mandate. It's still below probably what they think full employment is. So for them, it's all about inflation. And if the numbers come in, we'll talk about this obviously, but if the numbers come in high, then you're going to have Wall Street start betting that maybe they will change their mind. I just wondered, I think the question of the day for Wall Street is, what happens if the Wall Street Journal reporter is in the shower or something and misses the phone call?
Yeah. Nikki Leaks.
Well, there was a story out from Nikki Leaks, and it basically told us nothing. I saw it. I was so excited, and I read it through.
Nikki Leaks is happy with that assessment.
Well,
story
let's keep with the zeitgeist here. Colby Smith overnight with a treatment. Colby Smith overnight in the FT with a treatment on Claudia Sahm and recession part of America as well. Colby Smith says inflation's cracking. Is it?
No, I think that might be going a little bit too far. It is starting to decline, but we are in that
cracking
part where you've picked the low-hanging fruit, and it's going to be harder to get rid of some of the embedded inflation out there. So expect things to go down slowly. We may see a big drop to 3, but after that, it gets tougher.
Being very kind to our friends at the Financial Times and Dow Jones this morning, of course. Michael McKee with inflation data.
Do you know
just
the
moments
data already as we go to
away.
break here? Do they give it to you early?
If I told you, I'd have to kill you.
Abby Joseph Cohen on the other side of that data too, from New York. This is Bloomberg.
An inflation report for America. We'll have that for you in 20 seconds here. What is the Bloomberg terminal saying? It's saying a little bit of lift to equities and far more further curve steepening, I should say, in the last number of seconds. Lisa Abramowicz and Tom Keene, John Farrow preparing for our next eventful hour. Michael McKee with us and Abby Joseph Cohen to join us here after a careful study of the CPI report. That must mean we need to go to Michael McKee on the shock and awe of the moment.
Well, I need the BLS to go to its computer and start downloading the numbers. We're a little bit slow this morning, which sometimes happens when everybody starts hitting the numbers. Here we go. CPI comes in up 1/10. The headline, which is exactly what was forecast, down from 0.4 last month, and the core comes in at 0.4, exactly as forecast, which puts the year over year, and this is a base effect, at 4% for the headline, and the core at 5.3%, which is down from last month's 5.5, but a tick higher than the 5.2% that had been forecast. So, in other words, this is a kind of status quo report. It's almost exactly as forecast. And so what you're looking at is a Fed that doesn't have any reason to change whatever view it has decided on, if it has decided on as of today.
Well, you jump into the data here, Mike. The status quo is a lift to the equity markets. You see that on Bloomberg Television and Radio. NASDAQ up 0.6%, up 0.3% earlier. Maybe call it the Kospi of the American system right now. The VIX was 15. The VIX comes into a more optimistic 14.59. Lisa, the move in yields is tangible, lower yields right now.
Which is interesting because if you look at core year over year, it actually surprised to the upside. People are looking past that. They're looking at the headline. And to me, that's interesting because a lot of people were saying the core would be more important. People want to see some sort of deceleration, and they're willing to take it even if it's not as much as people
I like the status quo, the mix here that we see among 4, 5, 6 data. And dare I say, they're going to go, we need to look at PPI tomorrow?
No, actually. I think that this basically, what the market is saying, at least the initial reaction, which obviously can change in a heartbeat, basically is saying that this takes off the need for off the table the need for the Fed to come out and surprise markets with a rate hike. They are okay holding because there wasn't some sort of significant upside surprise.
I'm going to go to a global growth statement off this. This is all micro moves. We don't want to oversell this right now, but the answer is equities lift and lift nicely. The S&P well over 4,400 on its futures. Abby Joseph Cohen just fell off her chair on 4,400, predicting another bull market. We'll get to her in a moment. Professor Cohen, I should say. But what I really want to point out is even oil is on the bid. West Texas Intermediate up $1.83. It's almost a 3% move, 68.92 off the 66 print that we saw the other day. Mike McKee, give us further data here on the status quo of 4,000 lines of BLS report.
Well, the big news comes in energy. No surprise there. Gasoline prices down 5.6%. And we should see if prices in the markets hold that go into July to June as well. Energy services down 1.4% overall. Apparel prices down 0.2. Used cars and trucks up 4.4%. We've been waiting. There's been a drop on the wholesale level, been waiting for that to get into the CPI. Not there yet. And some analysts have been saying, watch the numbers in July. When we get the June report, it'll go down in June, and that'll put some extra pressure on it.
Abby from Queens says, what's rents doing?
Well, rent of primary residences up 0.5. I'm sorry, that's a tick down from the 0.6 of a prior month. Same, though, as in March. So not a major drop yet, but it does show some movement. Also 0.5 for owners' equivalent rent. You guys were talking earlier about airfares and how they're hanging in there. Wrong. Airfares down 2.6%, a fairly large drop. Down 3% after being down 2.6% last month. So airfares seem to have topped out, which is one of the reasons that we're seeing some downward pressure.
10 seconds to get to Professor Cohen. Does this change your questioning to Jerome Powell tomorrow?
No, I think it still leaves the question open. If they don't move tomorrow and give us a hawkish hint, then what is it that's going to move you to raise in July? Does it have to be a turnaround in inflation? Because right now we're seeing inflation sort of on the path that they have laid out.
Very good. Michael McKee with us. And, of course, this important work tomorrow as the Federal Reserve reports. We'll have our special coverage tomorrow afternoon. It is a joy after a pandemic to have Abby Joseph Cohen darken the door of our surveillance studio, I should say. She is not with Goldman Sachs. It is a whole new world after all for the former Goldman Sachs partner, professor at Columbia Business School, and joins us after giving out bushels of C's this term. Wonderful to have you in the studio, Abby. Once again, it's an Abby Joseph Cohen market in that you have to believe in optimism on the American economic experiment. And within all the caution and gloom, equities will rise. Is this a bull market off the October lows? And is it a better time ahead for the stock market?
There are quite a few questions embedded in there, Tom, and let me just say I'm delighted to darken your door, so thank you for the invitation. I believe that what we're seeing is that investors are thinking differently than many of the talking heads. Many of the people who are required to make daily comments about what's happening, I think overreacted in some way to daily data or monthly data and forgot to look at things in context. So, for example, Michael did a great job of saying, here's where inflation is now, and let's put that in the context of where it was a year ago. And what we basically see is that inflation is coming down. It takes pressure off of the Fed to continue to raise interest rates. The other thing that we're seeing in the data, not necessarily every week or every month, is that there is ongoing economic growth in the United States. It has been surprisingly good, but not relative to consensus expectations, but not really a surprise when you think about the strength of the consumer. When the Fed began to raise interest rates more aggressively more than a year ago, the household balance sheet was in the best condition we have ever seen. Credit was in very good shape relative to income levels, and we also know that the employment situation has been good and has not really shown any deterioration. And in our U.S. economy, that really is the base for economic growth.
I wonder, especially on the heels of the CPI report that came in pretty much status quo, we are seeing some sort of disinflation. We also are still seeing that dynamism with Wells Fargo CFO coming out this morning and saying that they're seeing an increase in card spending and real kind of strength there. You put these two together. Do you now buy into the immaculate disinflation, this idea that you could get a new bull market and disinflation even if growth slows?
I have been consistently in the camp that we would see some slowing in growth but no recession, and that we could see inflation come down. And part of that is because I've had confidence in the Fed that they would be paying careful attention to the data. And so when we think about what they may or may not do tomorrow, I think that they have the option to, I don't know if we're going to call it skip or pause, let other people assign something to that. But the thing that I learned as an economist at the Fed is we don't know how long it takes for monetary policy changes to actually affect the economy. And I think that they have already done so much. We already have an inverted yield curve. If I were voting, which I'm not, but if I were a voting member of the FOMC, I would vote for wait and watch.
Well, and that seems to be what the consensus is as far as what people are expecting. I am wondering, as you advise the boards of public investment firms to try to understand how to position, would you say it's time to lean in? That it's time to actually bet on a broadening of the rally, that it's time to really understand that perhaps we're going to go back to something that's a lower yield reality?
Yeah, I know that we're all focused on the fact that we're now back to where we were. I think the time to have made a really good decision was late last year or early this year, when everyone was so disturbed by what might happen and what I considered to be a low probability scenario. That was really the opportunity. And as I take a look at things now, I say, okay, equity valuations are not as appealing to me as they were in November or December, because the PE has risen for the overall market. And so what I'm advising is balance. Number one, we have an opportunity for the first time in ages in fixed income. And I would go with high quality corporates, treasuries, and so on. You can get 4 or 5% return on a treasury. Not bad. Number two, in the equity market, I would be looking at some of the sectors that haven't performed well. 40% of the S&P 500 roughly is IT and communication. And these are the two sectors that have done so much better than the rest. So if you're concerned about relative valuation, there's some great opportunities in some of the more cyclical areas. And if people increasingly believe that there will not be a recession, that's where you start to look for opportunity.
Just real quick here, do you think that the whole AI hype has been overplayed, that it's kind of
Lisa.
starting to get a little concerning?
I have been speaking to computer science professors and experts
Never did that at Goldman Sachs.
I have an undergraduate degree in computer science, as ancient as that might be. And what they are basically saying is they're kind of nervous about how AI proceeds. There is the sense that if you put good data in, you'll get good results out. And what the scientists are saying is it's not true, because the processes that are being used are not really being properly regulated. They are advising pilot projects so we can see what happens. One other comment quickly, if I may.
Please.
This Congress hasn't yet figured out how to regulate the internet. And so we may be pretty far behind in terms of whether there should be some controls over AI. And I'm not talking about anything draconian. I'm just talking about guardrails. And our Congress hasn't yet figured out what to do.
I got 8 ways to go here, and I got 40 seconds. Mr. Costin at the shop downtown goes from 4,000 to 4,500 SPX. I don't want you to play the game you used to play at Goldman Sachs, but I do want you to tell me what the second leg of a bull market looks like. The first leg, as you alluded to, is easy money. What happens now in a second leg of a presumed bull market?
Sure. I've been at that 4,500 level since last December. So I'm not surprised in terms of what we have seen. So when I take a look now at David's forecast, which is very thorough, he's talking about an increase to about 4,700. I think that's reasonable when I look at the profit outlook and also what might happen to PEs.
Does Lee Bollinger and the rest of Columbia University know you're gaming the SPX off a Bloomberg terminal at school? Are you really doing that?
I am not.
You're not placing trades.
I'm doing that at home. But
okay, you're on the couch with a laptop at home. Abby Joseph Cohen on a day of inflation. Michael McKee says it's status quo inflation.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. Former President Donald Trump will appear in a Miami court today to face criminal charges. Miami's police chief said they're prepared for crowds of up to 50,000 people. Now, Trump is expected to enter a plea to a 37-count indictment accusing him of mishandling classified documents. There are more signs that China is increasingly concerned about a slowing economy. Bloomberg's learned that Beijing is considering a broad package of stimulus measures. Meanwhile, China's central bank has unexpectedly lowered a key short-term interest rate. The CEO of Barclays says there are several ways to look at UBS's takeover of Credit Suisse. CS Venkatakrishnan spoke to Bloomberg in an exclusive interview.
Credit Suisse and UBS's merger has two important consequences. One, for the financial system as a whole, it has stabilized it, because a slightly wobbly G-SIFI bank is no longer there. It's absorbed into UBS in a very solid transaction. The second is, as UBS develops its business model, it will be for Barclays both an important client for our markets business and a competitor for us in investment banking.
Meanwhile, UBS has poached nearly a dozen of Barclays' top technology bankers. And for the first time since the start of the COVID pandemic, offices in New York City crossed the 50% occupancy market. Now, that's according to data from security firms Castle Systems. It says occupancy last week was up more than 4 percentage points from the week before. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Lisa Mateo, and this is Bloomberg.
Even today, greater than 80+% of the way the world operates around energy right now is still fossil fuels, you know, when you kind of look at it. And probably what's more striking is the fact that the demand for it is going up every year. So we need to get that to go in the other direction.
The competencies of Carmichael Roberts, Breakthrough Energy Ventures Investment to say he's a committee co-lead barely describes how he's trying to move forward the dialogue on energy. Look for that full interview tonight. Bloomberg Wealth with David Rubenstein at 9 p.m. as well. On the markets, quickly off of what Mike McKee called a status quo inflation report. Good news, and Mike told me as we were in commercial break that what's really going on here is the dynamic of service sector inflation. When you parse that out, there's an ebbing that is apparent within that, 70% of the American economy, goods inflation flat to a little bit up, actually. And you get it in a better market. NASDAQ up 0.3%, changes to NASDAQ up 0.7%. The VIX 15 comes into a nice 14.59. Lisa mentioning 7 basis points in the 2-year yield, 4.50%. And I note oil finally getting a lift off 3 days of agony down to a 66 handle. American oil 68.65, up $1.54. 2.3%. There's a growthiness there on a service sector side. Joining us now, David Rubenstein, co-founder of the Carlyle Group and his very successful Bloomberg Wealth. And the rap here on David Rubenstein, and it's wrong, is he only speaks to the great and worthy. Not this time around. David Rubenstein speaks to Mr. Roberts here about the view forward on energy. Carmichael Roberts, let's start with a simple question, David. Who is he?
Carmichael Roberts is a man who runs the Breakthrough Energy Investment Committee. Breakthrough Energy was started by Bill Gates to find young companies that could be invested in that would help break the dependence on oil and gas and help with climate change. And so Carmichael Roberts, who I've known for a long time, when I was the chairman of the board at Duke University, Carmichael Roberts was on the board. He's a Duke graduate, PhD from Duke in chemistry, and he's had a lot of investment experience in the venture capital world. When Bill Gates was looking for a chief investment officer to run Breakthrough Energy, he selected Carmichael Roberts almost on the spot. He interviewed him and basically hired him then. They've now made 100 investments. I should disclose that I'm an investor in Breakthrough Energy, along with a lot of other investment people who want to make some dent in the idea that we can find energy sources that are not completely oil and gas dependent. And so that's what it's done. And it'll take a long time. The investments are going to take many years before they really come to fruition. But so far, they've now on their third fund, I think, are about to go into the third fund. And it seems to be doing well. I haven't gotten any profit distributions yet, but I'm hopeful.
And this is something that
Checks
I know.
in the mail.
Well, I know that I believe that Michael Bloomberg, the founder of the company that we work for, also is an investor in this particular fund. I'm curious, David, though, his approach really highlights a shift in the renewable energy sphere, which is we don't need to get rid of fossil fuels, but it is one piece, and we need to focus on mitigating some of the effects. Can you talk about how that is sort of the new shift in the renewables world?
Well, obviously, we are very dependent on oil and gas. It provides roughly 80% of the energy the world uses. Were there no oil and gas on the face of the earth, had it never been discovered, I've often asked people, would civilization be further ahead or further behind? And most people say that civilization would be further behind had we not discovered oil and gas. But we do have oil and gas. We're now so dependent on it, though, that we're probably hurting the atmosphere in dramatic ways. So I think there's a push by Bill Gates, Breakthrough Energy, and many other people around the world to reduce our dependence on oil and gas through alternative renewable sources. But it's going to take a long time. It's much more expensive to use some renewable sources, not all, but some. And I think it's a real challenge. But it's clearly people in my generation want to get it done. I'm not likely to live long enough to see the full benefits of it, but hopefully my children, my grandchildren, great-grandchildren will live in a world where we're not so dependent on oil and gas.
We've seen real pushback, and it's really been evidenced by the lack of comments by C-suite executives on recent earnings calls talking about climate change, talking about just investing in renewables. There's been a shift away from that, with shareholders basically saying you guys need to really just focus on the bread and butter of what you're doing in the here and now. You're seeing that also with the big oil companies. Have you felt that as well? And have these funds, when you were talking to Carmichael, did he talk at all about that sort of shift in sentiment?
Well, I'd say 10 years ago, it was difficult to find an oil company executive who would admit that there was climate change or that it was caused by human activity. I think almost every oil executive that I'm aware of would today admit that climate change is a human-induced activity, and it is probably caused by the excessive use of oil and gas. That doesn't mean that they're getting out of the oil and gas business, but they recognize that that there is something they have to do. But oil and gas, large oil and gas companies are clearly going to be using oil and gas for quite some time. That's their bread and butter. But they are doing more than they were before in trying to invest in renewables. And while there has been a pushback from some people saying, look, we can't be dependent completely on renewables because we're so dependent on oil and gas to make the world operate, I do think that oil company executives are sensitive to the fact that they can't act like they did 10 or 20 years ago when it was said oil and gas is the future, and when it is not. Remember, we use roughly 105 million barrels of oil a day around the world, 105 million barrels of oil a day. That's a lot. And now, as a result of the oil and gas we use, there's an enormous amount of carbon in the atmosphere, and it's going to take 30, 40, 50 years or more before the current carbon is out of the atmosphere, let alone what we're adding to it. So it's not likely that all of us on this show right now are likely to be around before the carbon is gone.
David, I find fascinating out of the pandemic, and I remember looking at Newcastle Coal in Australia go to the moon. There's a basic idea that ESG is in retreat, and there's a large part of America, I don't know if they're anti-climate change or they're doubting climate change, but they're certainly anti-ESG as a corporate statement, as a philosophy. From where you sit with all of your connections and the view forward 3 years or 5 years, is ESG in retreat?
I don't think so. I know that, let's say, the state of Florida has pulled some money out of BlackRock, but Larry Fink has said that more people have come in because of his strong ESG position than have gone away. I think it gets a lot of attention because when you say you're against ESG, it's newsworthy. But generally, the zeitgeist of the era, certainly people in my generation and younger, are saying, yes, ESG is something that's here to stay. That doesn't mean you have to do only things that are good for ESG. You have to recognize that not everything you do is going to be good on ESG. But I do think that the younger generation certainly recognizes that more has to be done. Now, ESG means many different things to many different people. But I think if you take the large private equity firms, they all have very significant ESG programs, in large part because they think it's the right thing to do, but also because their clients, their investors, want something to be done. It's very difficult today to raise money for an oil and gas fund. It's very easy to raise money for something that's ESG oriented. And I think that reflects the era.
So you're suggesting out 24 months, just very quickly here, David, that we won't see a breaking of that enthusiasm to invest because we want to, and not the do-gooderism or the virtue signaling of it, but the idea that there is a calculable business advantage to doing ESG. That still remains after the battles of the last 3 years?
I think it does. I do think that ESG, while it has its detractors, is here and not going away. And as we have climate change problems throughout the world, increasingly people are seeing this is something we've got to deal with. For example, in New York, you had fires coming down from the forest fires that were in Canada, and it really polluted the air in Washington as well. And these kind of things don't just happen. They happen because we are really going through a shift in the way that climate is operating on the face of the earth. And I really believe that people increasingly in all parts of the world are seeing how climate change is affecting their lives. And as a result, I don't think ESG is going away. Clearly, there's pushback. There's always pushback. Change in anything always produces some pushback. The pushback we've seen, for example, from the governor of Florida is not insignificant, but I don't think that is going to be the majority, particularly with younger people who realize that they have the ability to do something in their lifetime to affect climate change.
David, thank you so much. David Rubenstein with us, of course, with the Carlyle Group, and look for his wonderful effort tonight with Carmichael Roberts, Bloomberg Wealth. Look at that in the 9 p.m. hour. Lisa, just generally, a lift to the market. Jason Furman out on Twitter with a nice breakdown of beneath the headline data, disinflationary trends in place.
And what you're seeing in the yield space is 8 basis points lower than where it started. You're seeing a more significant decline if you look at just the initial knee-jerk reaction, about 11 basis points. I'm just curious, if this doesn't change the narrative for June, are people going to start moving away from betting that the Fed is going to raise rates in July? Because at a certain point, does this mean they're done if the disinflationary process has started, or is it too soon to be able to really say that?
It's too soon. You got to get beyond this meeting. We've got the data today. We've been waiting for this data to get to tomorrow. We'll have all that coverage for you tomorrow. Wonderful guest lineup for you on an afternoon program. The three of us are here tomorrow morning, right?
Yes, in the morning.
We're going to be here. We don't have off. Okay, fine. We're going to do that tomorrow. The Fed meeting. Michael McKee, of course, at that key press conference. Good morning.